We are always curious and seek opportunity. We have the spirit and insight to explore the moon, Mars, and beyond. But if rovers are to be the qualities of us as a race, we miss the most important thing: perseverance. We will meet many setbacks on the way to Mars. However, we can persevere.
Perseverance is set to blast off to Mars in July. That's the Bloomberg NJIT STEM report. Tom, Lisa, Jonathan.
Thanks so much. Greatly appreciate that this morning. Mr. Bullard's still in conversation with Mr. Michael McKee. Says recession risk models have spiked higher. Fed willing to do what it takes to get through this. The market readjusting to new lows for the day. Futures at negative 94. Dow futures negative 744. Let me give you those levels. Well under 3,000 on SPX 29.23. Dow futures 25.316. And the VIX. I'll get my link. It's Friday, folks. Stay with me. The VIX, 48.79, up 9 big figures. And John, the 2-year yield confirms this move.
The 30s with a break of 130. Very, very briefly just there, 129 on a US 30-year yield. We're down 24 basis points on a session, guys. Let's just take a step back from that. The 30-year yield is down 24 basis points on a session without an immediate catalyst, without a single headline, without a big story overnight. It's just risk aversion has built up over the last few months, and bang, we're seeing huge moves in the Treasury market.
This is the question, the velocity of that, which you keep pointing out. When does that break something? Right? I mean, that's the question that a lot of people are wondering. Who's on the other side of these trades? When do we start to see the systemic ripples that we can see in funds and beyond?
And you see balance sheet adjustment off that. And of course, in India, the catalyst for the new weak rupee was a very difficult bank readjustment in the last 24 hours. Euro Swissy confirming all of these gyrations with Swiss franc ever stronger. Again, futures negative 93, Dow futures negative 750. Please stay with us through the morning. Good conversation in this time of crisis. This is Bloomberg. Good morning.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
On average, in London, a scooter or motorbike is stolen every hour. Make sure it's not yours. Lock your bike, chain the rear wheel, and cover to make it harder to steal. Lock, chain, cover. The Met Police.
A half-price dream holiday. Wouldn't want to miss that. A takeaway for free. Wouldn't want to miss that. And 30 gigs data for just £10 a month on Smarty Mobile. You definitely don't want to miss that. Our Smarty SIM comes packed with 30 gigs of data and unlimited calls and texts for just £10 a month on a 1-month plan. That's why Smarty won Best Value SIM-only network in the U-Switch Mobile Awards 2020. Don't miss out. Search Smarty Mobile. Smarty. Simple, honest mobile. Smarty.co.uk.
At the Bank of Santander, they've created Stan, a smart bot that can predict the future of remortgaging.
I read Stan. Will my mortgage rate go up?
1955 was the last time Newcastle won the cup.
No, try not to mumble.
Playing, let's get ready to rumble.
Oh.
Meanwhile, at Santander, they can't predict your future, but they'll help secure it with great mortgage rates fixed for up to 10 years. See what's possible at Santander.
Early repayment charges apply. Lending subject to status and criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
On the 24th of March, say hello to Disney Plus. Start streaming the most talked about movies, series and documentaries. From Marvel, plus Star Wars, plus Disney, plus Pixar, plus National Geographic. All in one place. And on the Plus side, pre-order now and you can get 1 year for just $49.99. Visit disneyplus.com for more. Offer valid until the 23rd of March. 18 plus, subscription required, T's and C's apply.
Incredible. This piece is my favourite. Stunning. I can't look away. Who's the artist? It's clearly a Costa. Oh, look. There's the artist now. What do you call this masterpiece?
We call it our velvety smooth flat white.
Crafted with the world's best beans and finished with a floret hand-drawn by expert baristas, the flat white at Costa Coffee really is a work of art. Visit the nation's favourite coffee shop and enjoy one today. The question, what is your favourite branded coffee shop, was asked. See costa.co.uk for full details.
At Asda, with our great range of beers and cider, it looks like you're hosting. Get 2 packs for just £18 or just £10 each. Like 12 bottles of Corona or 10 cans of Copperberg Cherry. Cracking brands, refreshing prices. Don't compromise. Asda. Save Save money, live better. Selected stores subject to availability. Offer ends 18th of March. 330 millilitres each. Drink aware.
The moment you realise that radiator isn't warming up, it's freezing and half the class are coming for a sleepover. The moment you realise you're covered by British Gas Home Care from £14 a month. That's just 46p a day, including parts and labour. Buy selected home care cover online by the 10th of March and get 1 month free. British Gas, here to solve. Search British Gas Home Care. Conditions apply. Prices vary by postcode.
The first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
The good news is the economy is strong. The bad news is the economy is strong.
Financial crises take a really long time to recover from.
Finance.
The strong job market's pulling people back in.
You can't have for very long, monetary union without a fiscal union.
Investment.
What we preach is extreme diversification.
It's hard to have sustained productivity without capital investment.
Bloomberg Surveillance with Tom Keene and Jonathan Farrow on Bloomberg Radio.
Good morning, everyone. Bloomberg Surveillance and an absolutely historic Bloomberg Surveillance this morning. It is Jobs Day in America, and no one cares. John, we've never seen it before in all the years I've done this. Every expert, Carl Riccadonna of Bloomberg, all the economists we speak to, it is old and ancient news. If that's the case, what's the new news?
The survey week was in the middle of the month. If it's good, people will shrug it off. If it's bad, they'll be like, whoa, it's going to get really bad. And that's the story in the bond market. 30-year yields down 23 basis points to 131. 2 Mondays ago, your 2-year yield was 130. That's where your 30 is now.
That's a nice framework. And, of course, when we talk basis points, for those of you worried about your 30-year refinancing your mortgage over the weekend, that's 0.25 percentage point that the 30-year has come in 2 cups of coffee. What is so important, we say particularly good morning to Global Wall Street, tuning in right now to get the day started with futures negative 90. They were negative a little more earlier. We're not to negative 1,000 on Dow futures, but that tone is there where the VIX was out 9 big figures, now 8 figures, 47.31. And John, to me, what is so important and so different today, with a global slowdown, it's yields lower, but not with a steepening yield curve.
Lisa, some people are crazy enough to call me up and ask me for advice. And someone called me up the other day and said, shall I refi? Or are they going to cut rates again? Shall I wait? And I wonder how many people feel that way at the moment.
Absolutely. I think that most people think, let's wait, because frankly, yields are going to go lower. And actually, if you look at the technicals, it suggests that mortgage rates will go substantially lower based on a number of different metrics. But again, the Fed is expected now to cut rates by 50 more basis points in a couple weeks after an emergency 50 basis point cut, the first since 2008.
Jim Bullard, in conversation with our Michael McKee, I thought it was a non-interview, but far more importantly, let's frame now what our listeners need to hear from the Fed. And to me, it's their primal scream in whichever way is appropriate for the chair to speak to the other institutions in America.
I think that's absolutely right. I don't think you need to inject fear into the situation. You need to say, this is the situation we see before us. What I do want you to know is if downside risks materialize, we have these tools ready to go to address these problems. You've got to be very targeted and very specific. Governor Bailey, incoming Governor Bailey at the Bank of England, Lisa, he didn't hold back. He didn't hold back. He said we need to work with Treasury. He said we need to work with Treasury to come up with the tools to deploy if we need to.
This is the problem. The Fed does not have the tools that are really required. And there was a story out today on the Bloomberg talking about that. John, you've been talking about that for a long time. Loans to small and medium-sized businesses. Who is going to provide those? The Fed does not have the capability to do that themselves, Tom.
Before we get to our good guest on full faith and credit, permeating all the literature this week, and again, I've mentioned this a few times, I thought John Plender did a Plender tour de force in the FT on the corporate debt market, and we all know there's been a corporate debt buildup, but what's the so what of it? What's the specificity into the weekend of the tension in the corporate debt market?
Well, to me, I mean, what I'm watching right now is the record low bond yields in the investment grade universe, in particular for that triple B rated sector, the lowest tier of investment grade credit. A lot of people have been warning this has been the tier that has ballooned to the greatest size. What happens if it gets downgraded?
And what have those yields done this week?
Gone down.
The yields in the good quality bonds have gone down.
Yes, and even the lowest quality of the good quality bonds has gone down. You're not seeing the circuit breaker yet.
What's high yield garbage done?
Garbage has
garbage.
CFA. Stop.
Yeah. Level 4.
No.
It's French.
Yields have held it. I mean, they've gone up, and you are seeing a little bit more signs of stress, and they have underperformed investment grade. But still, you're not seeing that acute stress that you might expect given the sell-off that we're seeing in
John, why do you think President Trichet speaks to me? It's because, we talk about
garbage.
The garbage.
You speak in French. I just had a terminal customer reach out to me and say, look at TMF returns. This is the 20-year Treasury ETF, but it's 3 times levered. You can imagine what the performance is so far this year. So I had a quick look at where we are on the year in that, and we are up by 58%. And the question the gentleman asked me is that we need to ask some people, what's the other side of the trade look like? How does that hold up?
Why don't you bring in our good guest, really expert on full faith and credit dynamics.
Priya Misra, TD Securities Head of Global Rate Strategy, joins us now. Priya, by duration, doesn't matter the price, the yield, just get in there. That's the ultimate hedge. That seems to be the takeaway of this market.
It is. Thanks for having me on. It is because I think not every market is pricing in that same level of panic. I mean, you talked about high yield. Look at credit. Look at equities. Yes, we've had massive moves in the last 2 weeks, but the treasury market is essentially pricing in, a zero Fed funds rate by the end of the year.
Is that appropriate?
It's a very uncertain environment. I think certainly you've got the supply chain risk. I think when fear sets in, do consumers really pull back? So I think there should be some probability of return to the zero bound. It's just odd to me that one market is pricing it in entirely. Other markets are not at all there. So, what do you do if you hold risk assets? You de-risk, you go into safe haven. That's why treasury rates can continue to sort of rally here or decline because, it's still the only hedge out there to any risk asset.
What's the lower bound here? Is it zero?
I think if the Fed funds rate is not going negative, I think zero would be the fundamental lower bound. I mean, we've been calling for 75 basis points the 10-year. I didn't expect to get there today, but we're there. Can we rally more? I think if the Fed gets to zero, we can certainly rally as other risk assets underperform. I do think the Fed is not going negative. So I think the trade today in the treasury market is what's next. We've priced in zero. What's next? Are we going negative? I think negative is very, very difficult in the U.S. because we've got these money market funds that are going to break the buck, which is completely unacceptable. So I think we talk about QE, yield curve control. All of that helps the long end because QE essentially takes duration out of the market. So the only hedge is not going to be the front end because that's already pricing in zero. We're not going negative. So then, is it going to be yield curve control at, 25 basis points on the 10-year? I think that's what the treasury market is saying. And other markets are sort of catching up to this reality or to this potential reality.
Priya, you mentioned the yield curve, so let's discuss it. We've seen a couple of different stories in the yield curve. We had the bull steepener, front-end outperformance relative to the long end. And now we're seeing the bull flattener, long-end outperformance relative to the front end. Can you get behind one of those trades right now, or does this just change from day to day?
Yeah, so I think now that we're pricing in zero, the steepening is done. The only way you'll steepen is if we realize that actually this virus was nothing and we have a vaccine and a cure. Then the long end's going to sell off more. I think you raised a great point. A bull flattening actually is almost a policy mistake. And I think the Fed is going to be dragged in here. Unfortunately, we don't really need lower rates. So the Fed will probably come in and they'll cut. And we do expect them to follow up with more cuts. But I think the bull flattener is saying we need help. We need fiscal help. We need monetary help. I'm actually nervous about funding. I think we need some funding help. We need much bigger repo operations.
Right. That's right where I wanted to go. Priya, there's been some complex articles in the last 48 hours, as complex as the viral test kit, on funding and on the what I call the trust market, folks. This is well inside 2-year yield. As you write for TD this afternoon and into the weekend, describe the state of the trust market right now, that very short-term paper.
Yeah, so I think bills are what everybody wants. Unfortunately, the Fed has been buying 60 billion of them, so there's just very few treasury bills out there.
So it's pure crowding out.
Exactly, there is. And I think, for the Fed to move out the curve, well, they've been saying that it's because it's not QE because they're buying the front end. So there's almost the scarcity of front end paper.
What does that mean for the big banks? Into the weekend, what does that mean for the major banks and the super regionals?
So I'm a little less worried about the big banks because they all have significantly large liquidity portfolios. Because of LCR, they actually hold a lot of these high-quality liquid assets. The issue will be if the credit market pukes and then dealers end up holding on to all of this in their inventory, they need to fund it. So which is why the Fed needs to tell us that they are going to do more, repo operations if needed.
I wanted to point out there that's CFA level 4. Pukes is CFA level 4.
With garbage. Sorry.
Yes.
That's one of level 5. No, I mean, this is the big concern, right? Is when are we going to start to see the acute stress, the actual other side of the trade getting squeezed out because of the violence of the moves? How concerned are you at this point about financial stability? I mean, that sort of goes to the heart of everything you've just been saying.
Right, yes. And now I do think the Fed has some of those tools. I think they should dust off the TAF auctions because the discount window still has a stigma. I think we need some statement from the New York Fed that, those facilities are still, we can access them at any point. The discount window remains open. I think that sort of comfort will be helpful. I think New York Fed President Williams yesterday did make a comment, but, they need to acknowledge that there is a risk. But unfortunately, they're in this messaging problem. If they say there's a problem, then people say, what does the Fed know that we don't know? So I think we sort of have to see how this plays out. I'm really watching dealer inventories because if dealers get hit with this, they will need an outlet. And maybe that's not over the weekend. Maybe that's next week. And then we should expect the Fed to come out with liquidity operations. They do have their toolkit. Yeah. I think they don't have a way to solve the virus. But when things get bad enough, the Fed will help dealer liquidity, I do think.
Priya, super fast if you can. March 18th, next Fed meeting. What are you looking for?
We're looking for a 25 cut, and I think the chance of 50 is growing by the minute. The market's already priced for it. So if they go 25, they need to tell us that we're willing to do more if needed. But right now, we are calling for another cut, yes.
Priya Misra, always great to get your thoughts.
Priya, thank you so much. That was very smart.
Of global rate strategy. So we get you some news, some headlines worldwide. We can do that from New York. We can cross over to Bloomberg's Michael Barr. Good morning, Michael.
Good morning, John. Lisa, Tom. At least 12 people have died in the U.S. from the coronavirus. President Trump says he wants to keep politics out of the COVID-19 issue. At a town hall event in Scranton, Pennsylvania last night, the president said he's not blaming anybody, but he added,
some of the Democrats have said, no matter what, if we found a cure and everybody's better tomorrow morning at 9 o'clock, they would say he's done a terrible job. It's just automatic.
A group of family members of residents at a nursing home in Kirkland, Washington, want more answers on the conditions of their loved ones. 7 residents at the Life Care Center have died as a result of coronavirus, according to the King County Health Department. But family members at a news conference held outside the nursing home say at least 2 more residents died recently without knowing whether the virus is responsible. Pat Herrick is the daughter of a resident who died without being tested for the virus.
I want her body tested, and I've been told, well, we don't do that. We just have to assume that it's natural causes, and so I'm saying it's not okay. I need to have her tested for the larger picture.
Herrick is upset. She feels the staff does not have enough resources to deal with the outbreak, especially after she says a life care worker called her mid-morning Thursday to say her mother's condition was stable. Herrick told the worker, that's bull, my mother died at 3:30 this morning. President Donald Trump will visit disaster areas in Tennessee today, just days after storms that whipped across the state left 24 dead and many more injured. President Trump will be joined by Governor Bill Lee, Senator Marsha Blackburn, and other top officials during his visit. Trump approved a disaster declaration yesterday, making federal funding available to those affected by the storms in Davidson, Putnam, and Wilson counties. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, John.
Michael Barr, thanks so much. I'm going to pick it up, Michael, because as you know, Michael, I've made a faux pas of the highest level. John's got to do a data check here with markets deteriorating. I was thinking of the gentleman gentleman who throws the orb for the Philadelphia Phillies from third base to first. I said it was Mike Schmidt's restaurant in St. Louis. And Mark in St. Louis says, you're a moron. He's writing somewhere under the arch, Mike Shannon's restaurant. It was legendary in St. Louis.
I'm not sure if the correction is value add or calling you a moron that is value add.
I think it was a group effort as
on this
well.
program. Equity futures deteriorate. They're down 95
Do you know who Bob Gibson is?
on the S&P. I don't know. We're negative
pitcher of all
3%.
time.
Treasury's looking nasty. Yields down 24 on the 30-year, 129. From New York, this is Bloomberg Radio.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
On average, in London, a scooter or motorbike is stolen every hour. Make sure it's not yours. Lock your bike, chain the rear wheel, and cover to make it harder to steal. Lock, chain, cover. The Met Police.
We've all been in one, but how much do you really know about black cabs? For instance, did you know that a black cab has to be tall enough to accommodate an individual wearing a bowler hat? That's a lot of space for you and your briefcase. Or that Free Now drivers can use the bus lanes, the perfect getaway to make your meeting in time. And with 2-minute central London pickups, you needn't waste time searching for a taxi. Just download the Free Now app today and take the hassle out of getting round London.
This ad is made from 100% recycled commercials. Just like Smart Water's
all new
bottles are made from
100% recycled
plastic.
What's that number again?
100%. Every Smart Water bottle is made using recycled plastic, and because it's still
100%
recyclable, the plastic will be used again
and again.
Smart Water, now in a 100% recycled plastic bottle. Label and cap 100% recyclable, but not made from recycled plastic. Yet. We're working on it.
At Asda, with our great range of beers and cider, it looks like you're hosting. Get 2 packs for just £18 or just £10 each. Like 12 bottles of Corona or 10 cans of Copperberg Cherry. Cracking brands, refreshing prices. Don't compromise. Asda. Save money. Live better. Selected stores subject to availability. Offer ends 18th of March. 330 millilitres each. Drink aware.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From New York City, let's get you some price action, shall we? Equity futures are negative, down a little more than 3 percentage points on the week. Positive on the week coming into Friday. We'll be negative at the open if we hold on to these levels. If you get to the bond market, just take a quick peek at what's happening at the long end of the curve. That is where your outperformance is on a US 30-year yield. This is not a weekly move. This is not a monthly move. This is an intraday move on a 30-year Treasury. We come in 26 basis points, an all-time low of 128, as yields head south and aggressively so relative to what's happening elsewhere. Dollar weaker. If you get to the FX market, cable back to 130, euro dollar back to 113, the yen outperforming, dollar yen 105. And just to round things out, Tom, you know the story in commodities. Brent crude 47, WTI a 43 handle.
John Farrell, thank you so much. Greatly appreciate that this morning. Good morning, everyone. An extraordinary jobs day, and we are thrilled with immense consistency to have the perspective, the decades of labor perspective of Jim Glassman of J.P. Morgan with us. And this we set with futures at negative 95, Dow futures at negative 766. Jim, I'm going to get right to your core competency. You travel, you listen to the business of the business people doing banking business with the J.P. Morgan company. What do you hear from business coast to coast?
Well, I heard what I see in some of the data I heard from my clients in Washington last week where I was. And everybody knows this event is going to be disruptive, and they know what it's about, and they realize that it won't be long before things probably start to turn around. And if you look what's going on in China, they're getting back to work, maybe a little slower than we thought. So everybody know when you're faced with a crisis and you know what's causing the problem, you're not going to start slashing your staff and rethink your business plan if you think this is a transitory problem. And that's why I think jobless claims and employment data are so critical, because they tell you, is the business community able to look through this? Are they writing it through?
But what's so critical, and we want to make clear that Dr. Glassman works off a different platform than the good work of Bruce Kasman and Michael Ferroli and others, but you do link to the GDP adjustments of your shop. What does J.P. Morgan say about the markdown of our economic growth, given that businesses will look through a medical event?
We all sort of had the same idea. We think the first quarter is going to look pretty bad, and we expect a rebound. So when you look through all of this, you're seeing what my Chinese colleagues are saying, which is, at the end of the day, the growth over the 4 quarters of the year are going to look very similar to what we thought. It does a lot of damage right now, but then you get this rebound. And I think, we're going to talk about it. It's hard to talk about now when you don't know quite where the end is, but we're going to talk about this as a transitory shock when we get to the spring and summer. And I think all these actions that are being taken, out of all this, we're going to, I think, do a better job of sort of being aware of these kinds of crises. So I think all of us are expecting bad news right now, recovery, and then we're sort of back on track as we get into the summer months. We're all going to be talking about 2020 not too differently. We don't think there's a tremendous long-term damage to the economy.
Jim, a lot of people feel like they just have no idea, and that's what we're seeing priced into the markets and priced into the whippy action that we see day to day. And I'm just wondering, going forward, the bond market's really the story that's being told right now with Priya saying that it's pricing in recession. Can the Fed raise rates if they drop to zero?
Can they? Personally, I think the bond market is very confusing to read, because when you have all this asset purchases, it's really shortened the liquidity of the market. So fear has a bigger impact on the bond market. Look at the stock market. They're just as clever as the bond market. And stocks are down, 11%?
I know some people in fixed income that might disagree with you. But
I don't know. They're the same people. They're the same people. People who trade in bonds are the same as stocks.
It's a joke, Jim. Carry on.
But stock, stock PEs are almost 20 times earnings. The stock prices are down 11% from the all-time peak 2 weeks ago. This is not pricing in disaster. So there's something funky about the bond market. This is not a new thing. We've been seeing this for several years.
This speaks to the unknown unknowns of stuff that is not in the textbooks or what Robert Gordon teaches at Northwestern. I mean, the fact is, the last X number of years, we have been doing things in our economics, finance, and investment that are, to be kind, unconventional. Is that safe to say?
Yeah, I would
Are
say
these
so.
the unconventional outcomes of our unconventional policy?
Probably so. But I would say the thing about this scare right now is there's a lot of unknown about it, but we also know it'll pass. And we know the damage is being done now. So I think once you get a grip, like in China, just look what happened. Once you got a sense that the rate of infection was slowing, everyone started anticipating, okay, now we got to start talking about the rebound. I think the same thing is going to happen here once we get our hands around. I'm more interested in the rate of infection than anything else. What the Fed does is less important than what the CDC finds and the success they're able to in getting a grip on this thing. So it's unknown.
Jim, let me just pick up that line. What the Fed does is more important than what the CDC finds?
What the Fed does is less important.
Less important, okay.
No, I don't
wanted to clarify that.
Interest rates are not our issue.
I completely agree.
The problem with central bank actions is there is a risk they can undermine confidence and worry people. Interest rates are not the problem. The problem is...
Well, that was the first question Michael McKee said to Dr. Bullard in his non-interview. I mean, what did they do with their 50 basis point cut? And far more importantly than the action of the Fed, have they communicated appropriately in the last 7 days?
Yeah, I think the market reaction kind of told you, gave you the answer.
Thank you.
But that this is a policy error. Is that what you're saying?
I wouldn't call it a policy error. I would say when inflation's low, fine, the Fed can take out insurance, whatever. But I think there's a risk when you do things the way you do it. You can scare people if you're in a rush and you don't explain what you're doing.
I want to make this distinction, folks. We say good morning to you with futures negative 97, Dow futures negative 791, the VIX out 9 points. John, the distinction is not policy error or policy success. The distinction is the communication, the methodology of getting the message out. And I'm about 0 for 5 in the last messages I've heard.
Well, they've really been criticized for that, Jim. Yeah. Your thoughts on how they can make it better? I imagine they speak to market participants. What do they do?
Honestly, I think the steady hand is the best thing right now, and let's let the CDC take control of this. And I think we'll find out. If things play out the way we all think we're going to be feeling much better about this.
I think a phone call with Chairman Powell to Bloomberg Surveillance would be the first step towards communication improvement.
What does a steady hand mean? Does it mean a steadily cutting hand? I mean, that's basically what the market is.
If the facts show that.
I mean,
if the facts show it, we haven't seen the facts yet, and we know the facts will be ugly for a little while.
Jim,
then
there's
they'll
just no denying it anymore. It's a Federal Reserve led by a chairman who has allowed the market to completely hold them hostage. End of story. Done. The market has been right to price in more rate cuts. That's what we got this Tuesday.
We got that last year.
Many people expected to come.
Okay, can we pretend? When you wish upon a star, what's your jobs number for today?
Decent, 175. There was a big rush of people came into the market last month, so I think I'm expecting unemployment to go down. And jobless claims, I'm most intrigued about jobless claims because they are they know the most of what's going on.
Where were you? That was yesterday. Jim Glass
was with us with
JP Morgan, and we'll continue. Yeah, I'm going to pretend nothing's going on. It is a jobs day coming up. Jim Glassman to give us perspective, and Jeff Rosenberg, I believe, as well. Futures in negative 93. Stay with us. This is Bloomberg.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong. Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE, SIPC. This is...
At UKME, our chauffeur service is 6-star. Just like the package we offer our drivers. Join the company that treats its drivers like VIPs. Apply today at ukme.co.uk.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
On average, in London, a scooter or motorbike is stolen every hour. Make sure it's not yours. Lock your bike, chain the rear wheel, and cover to make it harder to steal. Lock, chain, cover. The Met Police.
A change is coming. Millions of people across the UK are realising that if their broadband's out of contract, they could be out of pocket. So it's time to switch and save with Vodafone Superfast Broadband for £21.95 a month. Join the Great British Broadband Switch today. The future's exciting. Ready? Vodafone.
18-month contract subject to credit check. Superfast 1, 73% of customers receive sync speeds above 35 megabits per second. Source Ofcom fairer pricing. Price may change during your contract. See vodafone.co.uk/broadband.
The famous five were discussing their next adventure to Oxford. Let's visit Christchurch Tower, said Dick. The Bodleian Library, added Julian. Magdalen Bridge, cried Anne. Dick jumped up. We'd better leave now. Oxford is so far away. Relax, said George. It's faster than you think by train. Anyway, we can't go yet. You're still in your pyjamas. London to Oxford in as little as 44 minutes. So adventures are closer than you think. Great Western Railway. Adventures start here. Fastest train from Paddington to Oxford. Terms and conditions apply.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We are live on Bloomberg Radio and we have a big number to bring to you. Here's Vinny, Dow Dice.
Okay, Jonathan, a strong non-farm payroll report. February, 273,000, almost 100,000 more than forecast. The prior month revised higher as well. Unemployment, 3.5%, back to a half-century low. Average hourly earnings, month over month, picking up 0.3%. Again, non-farm payrolls topping forecast by 100,000. 273,000 in February. January reversed higher. Unemployment 3.5%, a half-century low. I'm Vinny Del G. Dice, Bloomberg Radio. Let's go back to New York.
Remarkably on survey, except for a bang up non-farm payrolls number, to get through this quickly, and with the futures going negative 90 to negative 87, the yield market, Lisa, did the yield market move all that much?
No, and this is what I find most interesting. I'm watching two-year yields staying near session low, 0.4588%. And it really highlights how this just doesn't matter at a time of the coronavirus taking hold.
The gold comes in, it was up $20, now up $14. I'm going to call it a jumble, John, but wage growth as well. Jim Glasson with us with J.P. Morgan before we speak with Mr. Rosenberg over at BlackRock. Jim, I look at wage growth. The unemployment rate came in exactly as you predicted, but I look at the wage dynamic and it's right on survey as well. Are wages growing?
They're growing, but they're not crazy. And that's what gives the impression. There's a lot of people struggling, but it's doing better than it was doing. But I would say this does matter because it tells you, as we've seen many times in the past, when there's a shock that scares us in the markets, if businesses understand it, you're going to be surprised how resilient the economy is in the face of all this. Because businesses, if they understand what's going on, their big worry right now is they just need people. And so this is amazing to me that we're still able to get this kind of job growth with unemployment as low as it is. And actually, I'm more interested in the weekly jobless claims because they're more timely, and they're going to tell you if the business sector is struggling with all that's going on, they'll start cutting back, and they're not yet.
I can't think of a payrolls print this big that's generated tumbleweed blowing through global markets. Nothing. And the good news, Jim, to your point, I've always thought this with the data that's a little bit dated, tells you that we're in decent shape going into this growth scare. That's the good news coming out of this. And I asked this question to you because I think it's really important.
It is.
We're all laser focused on claims. If you're an employer right now in a tight labour market, you're going to be very reluctant to give up some of those stuff, aren't you?
Because you know it'll be very difficult to get them back. That's what they all say. They're having a hard time finding people. So why would you lay people off, come and knowing that there's a possibility in 3 to 6 months that you're going to want to be back again? So I think people are willing to ride out a storm for a short period of time.
Ken Rogoff wrote one final question, Dr. Glassman, before I let you go. Ken Rogoff wrote an incredibly important piece in Project Syndicate in the last 3 or 4 days, hearkening back to the 70s and the supply shocks that we saw in the 70s with oil and such. What we've heard this week, our zeitgeist is, yes, that's true, supply shocks, but also demand shocks. What's the character of this demand shock?
Well, I don't think we know yet. I mean, if it scares people, we don't know. If people, but you know what? If I don't go to a restaurant, I'm not going to double up tomorrow. But if I postpone purchases today, if I postpone car purchase, well, I'll be back. You know that kind of thing can be made up again. And the low energy prices are giving consumers a big break, by the way. So there's a lot of offsetting things here that make it very confusing. It's hard to tell.
Jim Glassman, thank you so much. With J.P. Morgan, we're thrilled that you can visit us on Jobs Day as well. John, the picture here was negative 94 on SPX, and we've come in at 8 points and negative 87. I guess that's a glimmer of good news off a huge, over 500,000 job formation in the last 2 months.
Pretty decent. Treasury yields are off the lows, but we're still down 21 basis points on the day. On a 30-year, you'll yield 132. Pleased to say that weighing in on the bond market now, Jeff Rosenberg, Senior PM on BlackRock's systematic fixed income team. Jeff, fantastic to have you with us. Your first take, please.
Well, I think you said it. It's, the most, irrelevant payroll report we've had in a long time. I'd love to talk about the payroll report because it's some good news. And as you said, it doesn't really matter. It's backward looking. It does remind us of how strong the economy was going into this coronavirus. But this information is dated. That's why it's not market moving. I guess what you could say is at least it's not bad news. If it was bad news into the coronavirus fears, who knows how the panic might have accelerated. But this is a reminder of the strength of the economy going into the shock. What we had last week was the monetary policy response. I mean, obviously we had it this week, but last week's declines in the equity markets prompted this week's monetary policy response. This week's equity market response, next week's story is the fiscal policy response. And that's what we're going to be talking about. I think we're going to move to that conversation because there's a very limited amount of what monetary policy can do, and it's going to be much greater about the focus on fiscal policy. If we get a strong, coherent, robust response, I think that could be very beneficial. But to the earlier question, we don't know what the demand side shock is from this supply side shock, but you need a fiscal policy response to address that. Monetary policy is limited.
Jeff, to your point about momentum, and this is something that Jim was talking about too, that the momentum was there in the U.S. economy before this shock. Why does that matter? What does that tell you in terms of the shape of the recovery and the scope of the recovery?
Well, it tells you that you have the ability to limit the damage to the economy because you're dealing with a shock from a position of strength, as opposed to dealing with a shock from a position of weakness and a position of vulnerability from a fundamental economic perspective. Now, I think what's going on in terms of the financial markets is that you had a shock from a fundamental economic perspective to a financial market that was very vulnerable. You had complacency, you had valuations at very high levels, you had very little cushion. So a lot of the drop is coming from very high levels. Or if we think about it from the fixed income perspective, a lot of the widening in credit spreads is coming from very tight levels, you're getting big moves in spreads, but the levels that you're at are hardly anything near recessionary type levels. They're getting you back into kind of fair value, mid expansion kind of levels. So there was a bit of if you look at the delta, the change looks very aggressive, but it's coming from a very tight level. So financial markets were a bit more vulnerable. The economy was much more resilient.
You can make the argument that stocks are not pricing in a recession. PE multiples still very high. Bonds, however, are. Do you think that bonds are overdone, that they're overbought at this level?
No, I think you got to be careful about bonds pricing in a recession versus bonds pricing in a preemptive policy reaction, and in some sense forcing that preemptive policy reaction. That's the kind of strange world that we're in. Is that financial conditions matter so much to the Fed that the bond market reaction is in anticipation of the Fed reacting to financial market conditions, and so the bond market is kind of previewing where the Fed's going to go. We saw that this week with 50 basis points. You're seeing it again with another 50 basis points anticipated. So, does that predict recession? Not sure. Does it predict policy response? Absolutely. And then the question is the combined policy response, again, monetary and fiscal, enough to forestall the recession?
Jeffrey Rosenberg with us, of course, with his wonderful strategy work at BlackRock and, of course, the mathematics of Carnegie Mellon as well. Jeff, I want to go mathy right now. I've got a fancy log chart of 2-year yield, the abruptness, the first derivative moves, the second derivative acceleration that we're seeing has been extraordinary. The Greek letter for this is gamma. Should our listeners care about gamma? Does the abruptness of all these moves really matter forward?
Well, there's a lot of technical aspects to financial markets that encourage this, rate of change and acceleration. You got a conversation. Another terminology for gamma is convexity. You have a lot of convexity in the market. I mean, this is a remarkable world where the financial people want to talk about the virus, but you can have the doctors wanting to talk about refinancing their mortgages. And so when you're refinancing your mortgage, what you're getting is a lot of that gamma in the market. It's a huge marketplace. It has a lot of dynamics, and it's one of the factors behind the accelerated move. Certainly there's a fundamental factor, which is the expectation for policy change, but it gets exacerbated by these technical factors of a demand for duration when the rest of us are going to look at this as an opportunity to refinance our mortgages. When we do that, the demand for replacing that interest rate risk drives these rates even lower. So there's a lot of that going on in the bond market.
Jeff, just quickly from me, my final question, just picking up on the pace of this move. 2 Mondays ago, the high of the session for the 2-year yield, 130.50. The 30-year yield is south of that right now, and the 2-year is now only 46 basis points. When things move this quick, and I want you to take me inside the technicals of the market, when things move this quick, do things break?
Well, that's a question of financial vulnerabilities, right? And in the rate market, part of that rate hedging, that's a very liquid market. It's a very liquid market. It's a functional market, and it's not breaking, but it's bending. And when I say bending, it's accelerating the moves. In terms of the breakage of the market, where you have greater vulnerabilities, is really in different parts of the fixed income market, where you see liquidity and cash flows and difficulties of refinancing. That's a bit what the preemptive monetary policy is partly to address. Let's make sure there's ample amounts of liquidity. There's no technical defaults because someone can't get access to liquidity. And you certainly see that in a global perspective when you look at, say, for example, the Chinese response and a fiscal monetary policy response to ensure that small, medium enterprises are getting access to rolling over as they're having a short-term cash flow issue. So those policy interventions can help in those circumstances prevent markets from breaking and exacerbating losses where they otherwise wouldn't need to occur.
If you're part of Global Wall Street, you need to stay with us. We're going to come back with Jeff Rosenberg on the trust market, that short-term paper market here. We'll do that in a few moments. With our news in New York City, here's Michael Barr.
Tom, Lisa, John, thank you very much. The confirmed number of coronavirus cases has now surpassed 100,000. Iran says the new virus has killed 124 people amid 4,747 confirmed cases in the Islamic Republic. The health ministry spokesman warned authorities could use unspecified force to halt travel between major cities. Officials in Northern California ordered the Grand Princess cruise ship to be held off the shore of San Francisco after an elderly man who embarked the ship on an earlier voyage passed away from COVID-19. The CDC is ordering screenings for the remaining passengers and crew on the ship. Debbie Loftus took the cruise with her parents and said they did have some hesitation with taking the cruise after the Diamond Princess was quarantined in Japan with over 600 confirmed cases and 6 deaths.
We did have some concerns, and especially because my parents are elderly and my mom has asthma. So we talked it over, and we just figured that that there was a small chance, but it was worth taking.
Meanwhile, the White House canceled a planned presidential visit to the Centers for Disease Control and Prevention in Atlanta. According to a White House official, the president does not want to interfere with the CDC's mission to protect the health and welfare of their people and the agency. President Trump took aim at Democratic presidential candidate Joe Biden about his mental health. During a Fox News town hall event in Scranton, the president cited some recent gaffes made by the former vice president.
He also said 150 million people were killed with guns, and he was running for the United States Senate. Support me, I'm running for the United States. There's something going on there.
Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts, more than 120 countries. I'm Michael Barr. This is Bloomberg. John, Tom, Lisa.
Michael Barr, thank you, sir. Anyone remember the payrolls report? It came out about 13 minutes ago. Came out about 13 minutes ago, and it was really quite decent.
The tape is remarkable.
Big upside surprise. Nobody cares. Equity futures near the lows, down 293, down by 2.94%, and a bond market that is just bid. From New York, this is Bloomberg Radio.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. Huge week for mortgage rates as investors worry about the spread of the coronavirus and flood to bonds and drive mortgage rates lower.
Not just unbelievable, but absolutely historic.
Mark Fleming is chief economist at First American.
And as far as I and my fellow housing market economists can tell, we've never seen a 30-year fixed-rate mortgage this low.
And Fleming says between the refi boom this is sparking and the buying boom it could set off, that's a lot of stimulus for the U.S. economy.
Put money in people's pockets, great form of stimulus to be spent. And if you're a potential first-time home buyer, you know, all of a sudden you can probably afford $25,000, $30,000 more home than you were just 5 days ago.
Low mortgage rates have lenders staffing up to meet demand. Quicken is calling this week among the busiest for mortgage applications in its 35-year history. Fleming says mortgage rates can't go much lower from here. And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
On average, in London, a scooter or motorbike is stolen every hour. Make sure it's not yours. Lock your bike, chain the rear wheel, and cover to make it harder to steal. Lock, chain, cover. The Met Police.
Delayed at the dentist, and now you're late for school pickup. You need a free now. Need to take the dog to the vet before lunch. Should have gotten a free now. Trying to get 4 kids and their baggage to the airport? Free now. Sometimes you can't get from A to B fast enough.
Download the Free Now app today for quick pickups and reliable drivers, no matter the situation. Less hassle, more hustle with Free Now.
At Asda, with our great range of beers and cider, it looks like you're hosting. Get 2 packs for just £18 or just £10 each. Like 12 bottles of Corona or 10 cans of Copperberg Cherry. Cracking brands, refreshing prices. Don't compromise. Asda. Save money. Live better. Selected stores subject to availability. Offer ends 18th of March. 330 millilitres each. Drink aware.
It's headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Good morning from Bloomberg's World Headquarters in New York. I'm Lisa Bromwitz. This is a Bloomberg Business Flash. Let's take a look at what was going to be a week of recovery. It is no more. Stocks tumbling all around the world, reassessing the risk of coronavirus taking hold and stymieing any economic growth in the world this year. Take a look over in Europe. The CAC leading the declines, down 3.9%. The tape getting worse as the day goes on, even though the U.S. published blockbuster, or better than expected, I should say, jobs numbers. And we can see red across the screen, the level there, just to give you a sense of the stocks. Europe 600 at the level 1366. Meanwhile, in the U.S., same story ahead of the open. We've got lower futures. The level on the NASDAQ's 269.50, S&P 87.50 now. And really, the story is in bond yields, just getting crushed as people look for any haven, down 16 basis points in the 10-year and 13 basis points on the 2-year. Where they are finding havens is not the dollar, fleeing the dollar as they expect the Fed to cut rates another 50 basis points later this month. But they are finding it in gold, absolutely surging to the highest level since 2013, poised for the best week, Tom, since 2009. This was a Bloomberg Business Flash.
Lisa, thanks so much. Negative 85 on futures. We were negative 94 earlier. I really want to make clear, like looking at an intraday of the VIX, 47.71. We had a tranche up. Let me get the surveillance mouse out here and tell you we had a real move at 7:22 a.m. Wall Street time, a leg up and a higher VIX and a market move down. And then we've been churning here and by no means have we reversed a difficult market when looking at that volatility index. Mr. Rosenberg with us. He is a senior portfolio manager of BlackRock and their systemic fixed income team. Jeff, I want you to go short-term systemic right now. I call it the trust market. Folks, this is well inside the 2-year space. It is the trust of overnight money. It is the trust of 3-day money. It is the trust of 90-day money. How's the trust market doing, Jeff Rosenberg?
I'm not sure I'm totally following that, but if you're talking about short-term confidence?
Yes, short-term confidence is evidenced by the short-term paper market into the weekend.
Yeah, I mean, look, the short-term markets are fine. There's a demand for cash. There's a flight to quality. There's a flight out of risk. That's what the markets are saying. That's a normal expected reaction to a lot of panic and a lot of uncertainty and a lot of risk that people have had in their equity portfolios. We looked at equity allocations over the last 5 years from some of the data sources that provide you kind of aggregate holdings. Yeah. Everybody's equity allocations have drifted higher. Not a huge amount, but they've been willing to drift higher because it's been a great fundamental market. And you have this outside shock that no one predicted, and you came into it, as I was saying in the earlier section, the economy came into it resilient, but financial markets came into it vulnerable. And so what you're having here is a forced rebalancing. And as part of that forced rebalancing, the beneficiaries are cash and safe haven assets and bonds, as we're clearly seeing. And you're also seeing that now in terms of the relative underperformance of higher risk segments of the equity markets. With the exception of some weird days last week, you're seeing that again today. REITs, utilities, interest rates, bond proxies doing better. That's all, normal behavior, but it is reflective of this de-risking of portfolios.
And that goes, Lisa, right to where your wheelhouse is. We do this, folks, with the futures back over to negative 94. Lisa, that's right to this spread study you've been looking at all week.
Well, yeah, and Jeff, I want to go back to your days when you were at Bank of America, you were heading global credit strategy. August 2007, I remember that very well, given the fact that August 2007 was the time.
Well, I guess we got some technical troubles right now. Lisa, I'm going to pick it up. I believe the gerbil that's is not the quarters. You didn't put the quarters in your machine to make your mic go.
I heard that the full faith and credit was a little bit faulty in the quarter space.
Full faith and credit of her microphone is not there. Jeff, let me pick it up with you. And to Lisa's good point all week, we've seen better. Okay, we have no Jeff Rosenberg, I guess. Okay, I'm getting my cues straight here. We lost Jeff Rosenberg. I'm sorry, off the deck at Bloomberg Radio, and that happens as well. Lisa, new lows in futures this morning, negative 97.
What I was going to say was I remember August 2007 when the commercial paper market over in Canada froze up. And this was ahead of the Lehman moment. It was a full more than a year before the Lehman moment. And there was a feeling of fear. Things are breaking in a way that were not expected. We are not necessarily there. And I'm trying to understand what is the corollary here? What is the historical reference point? Is it 2008? Is it 2007 when we started to see the rumblings of some sort of a crisis? I think that Jeffrey Rosenberg, is he back with us, Jeff?
Why don't you ask him one final question, Lisa? Ladies before gentlemen. Wait,
Jeff, are you there?
Yeah, I'm here. Can you guys hear me?
I'm just wondering, from your perspective, do you think that the corollary for this is 2007, 2008?
No, and really, guys, let's not do this. Let's not panic people in that way. That what happened in 2007, 2008 was very unique, and why you saw that happen in commercial paper markets and in the credit markets was because the center of the crisis was in the financial system, right? Let's calm people down a little bit rather than riling them up. This financial system is much more resilient to an external shock of coronavirus than to an external shock of subprime mortgages, which wasn't external. It was central, and it broke the financial system. And that's why you saw the commercial paper markets blow up and create more panic and more uncertainty. Those markets are resilient. They're operating as they should. They're reflective of flight to quality, but the issues and the concerns are not there. The issues and the concerns are with the uncertainty over what a virus does to economic activity. We're all feeling it in terms of we're getting emails from our schools. Are they shutting down? Our companies? Where are we working? That's where the panic is. Let's not panic people in other areas where there isn't a panic. Those markets are working well. There's more resilience. We will get through this once the uncertainty of how bad the impact to the economy is. And as I said earlier, we're going to need a little bit of help from our policymakers, and we're going to get it in terms of a fiscal policy response that will be robust and will help to offset the demand side shock. And we'll wake up and we'll see what the payroll report is reminding us of, which is, hey, we came into this with a pretty resilient economy.
Absolutely.
That resilience will be our source of strength when this uncertainty passes.
500,000 jobs in 90 days in 60 days is a big number. Jeffrey Rosenberg of BlackRock, thank you so much. And to review that, folks, in a non-jobs day, we had a terrific statistic and a lower unemployment rate. I'm sure the president will feature that. And Lawrence Kudlow with John Farrell will look for that in about 50 Bloomberg surveillance minutes. And I'm sure that Mr. Kudlow, of course, will be on top of that. The President of the United States has signed the $7.8 billion emergency coronavirus spending bill. Of course, one of the fiscal stimuluses that we have been talking about with our guests through the morning. We just had lows for the day. We've come back negative 85 on SPX, but we had a negative 94 there at one point. Dow futures negative 675. This is Bloomberg.
A half-price dream holiday, wouldn't want to miss that. A takeaway for free, wouldn't want to miss that. And 30 gigs data for just £10 a month on Smarty Mobile. You definitely don't want to miss that. Our Smarty SIM comes packed with 30 gigs of data and unlimited calls and texts for just £10 a month on a 1-month plan. That's why Smarty won Best Value SIM-only network in the USwitch Mobile Awards 2020. Don't miss out. Search Smarty Mobile. Smarty. Simple, honest mobile. Smarty.co.uk.
We've all been in one, but how much do you really know about black cabs? For instance, did you know that a black cab has to be tall enough to accommodate an individual wearing a bowler hat? That's a lot of space for you and your briefcase. Or that Free Now drivers can use the bus lanes, the perfect getaway to make your meeting in time. And with 2-minute central London pickups, you needn't waste time searching for a taxi. Just download the Free Now app today and take the hassle out of getting round London.
If you're going to have NHS dental treatment, don't assume you can claim it for free. Not all benefits entitle you to free treatment. And if you claim when you're not entitled, you could face a penalty charge of £100, plus the cost of your treatment. Thankfully, the NHS Eligibility Checker will help you find out if you can claim for free. Then next time you're at the dentist, you'll know exactly which box to tick. Search Check Before You Tick online today.
Despite never having used them, Alison Peartree was not initially a fan of purple bricks.
Because I heard from my uncle's cousin's neighbour's dog walker they don't have proper estate agents.
But Alison's uncle's cousin's neighbour's dog walker was wrong. Purple Bricks have experienced local agents ready to sell your home.
Turns out Martin from Purple Bricks was very knowledgeable. And he didn't charge commission. I've even recommended him to my sister's boyfriend's auntie's hairdresser, Sharon.
Purple Bricks. Book your free valuation today.
Fixed fee payable on instruction or after 10 months. Viewing service cost extra.
You could find a £5, a tenner, a 20, or even a crisp 50 inside the Sun on Sunday. That's right, cash! Yes, real banknotes inside the paper. We're giving away a wallet-busting amount of cash this weekend only in the Sun on Sunday. It pays to read The Sun. T's and C's apply.
At Asda, with our great range of beers and cider, it looks like you're hosting. Get 2 packs for just £18 or just £10 each. Like 12 bottles of Corona or 10 cans of Copperberg Cherry. Cracking brands, refreshing prices. Don't compromise. Asda. Save money. Live better. Selected stores subject to availability. Offer ends 18th of March. 330 millilitres each. Drink aware.
Look at that. A riveting quest. A glorious opportunity. A scratch card. Yet he remains unfazed by the challenge, wavering at nothing.
Miss, please keep it down. We're in the quiet area.
Sorry. Here we are. The moment of truth. As he reaches...
Instant excitement with scratch cards from the National Lottery. Your numbers make amazing happen. Search Dream Big, Play Small. Rules and procedures apply. Players must be 16 or over.
The Big B&Q 20% off bathroom event is now on. We've huge savings on a range of toilets, basins, baths and furniture. So you can get a great deal on the style that suits you. But hurry, 20% off ends Monday. You can do it when you B&Q it. Offer ends 9th of March. Subject to availability, see DIY.com.
You have to get it right the first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
I think the U.S. is going in for a couple years of very, very strong growth.
The deficit by early in the next decade will start to become a real problem for the markets.
Finance.
The consumer is really strong right now.
We don't realize how good times are now.
Investment.
The biggest problem that people have in investing in stocks is that they get out of the market.
It's not supposed to be easy. Anyone who finds it easy is stupid.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good Friday morning from New York City to our worldwide audience. Paul Sweeney, Tom Keene here with you. The last pre-corona jobs number comes through much stronger than expected, with the economy adding 273,000 jobs in February. The unemployment rate fell back to a half-century low of 3.5%. But, of course, the jobs number is not the main story here for markets. That would be the coronavirus. And we have continued fears once again weighing on the markets, with equity futures off about 3% right here in pre-market trading. Yields continue to plunge, with the 2-year Treasury at 0.46% and the 10-year sitting at about 0.74%. Let's get the latest on pre-market activity. Bloomberg Stocks editor Dave Wilson. Dave, what are you looking at? A lot of stuff coming across the tape here.
Oh, absolutely. And let's start with the biggest banks, especially J.P. Morgan. The shares are down 5% in early trading. CEO Jamie Dimon underwent emergency heart surgery yesterday. Co-presidents Daniel Pinto and Gordon Smith will run the bank during his recuperation. J.P. Morgan's peers are lower by about as much as demand for Treasury sends yields to record lows. You look at Bank of America, it's down 5%. Wells Fargo down 5%. Citigroup down 4.5%. Apple's lower by 3%. The introduction of an iPhone for 5G wireless networks may be delayed because of the coronavirus, according to Bank of America. The firm cited a conversation with a supply chain industry executive, Elliot Land. Microsoft's down 3.5%. The software maker said an employee at its main Seattle area campus and a remote worker for its LinkedIn unit contracted the coronavirus. Both have been quarantined. And you got Starbucks down 3.5%. The coffee shop chain said Chinese store closings from the coronavirus will cut second quarter earnings as much as 18 cents a share. Now, more than 90% of the stores that had been closed are now open. Moving on, you've got energy stocks taking a beating as Russia resists pressure from OPEC for deeper production cuts. That's driven down oil prices, and it's driven down the energy shares as well. ExxonMobil's down 4%, Chevron down 3.5%, ConocoPhillips down 5%. And bear in mind that yesterday, the S&P 500 Energy Index closed at its lowest level since March 2009.
Wow, just looking at crude, Dave, I mean, off, 3-4% here.
Absolutely, and the stocks are following suit.
Yep.
Tesla's down 5%. California's factory regulator said the electric car maker omitted hundreds of injuries at its plant in the state from annual summary data sent to the federal government. And Tesla's touted its safety record at the Fremont plant. On the deal front, you've got Cypress Semiconductor down 14.5%. People familiar with the matter said U.S. national security officials are opposed to an $8.7 billion takeover of the chipmaker by Germany's Infineon Technologies. They said the officials want President Trump to block the deal. And you have another potential deal, this one in the television business.
Yes, we do.
Tegna's up 28.5%. Reuters reported that the TV station owner received an $8.5 billion offer from Gray Television. These stories cited unnamed people familiar with the matter. Gray shares up 8% in early trading. You know what else is higher? Advanced Micro Devices up 2.5%. They're keeping their current goals for the quarter, even in the face of the coronavirus, and their CEO is optimistic about what's ahead for revenue. CEO Lisa Su predicting the company will achieve sales growth of 20% over the next 4 years and become more profitable along the way. Couple more? Well, why don't I just go through the travel stocks,
please,
starting with the airlines, because, the Dow Jones Transportation Average is now past the bear market threshold. As of yesterday, it was down more than 20% from a high in mid-January and heading lower. You've got American down 6% in early trading, United also down 6%, Delta down 4%. You look across other travel-related stocks, you see Carnival down 3%, Royal Caribbean down 5%, and in the hotel business, Hilton Worldwide down 4.5%, and Marriott International down 6%.
David Wilson, thank you so much, and he'll be watching those stocks through the day as well. We're not near the lows for the day here, but we're really getting there quickly. David Wilson will have to readjust in the next hour. Futures negative 91, Dow Futures negative 716, and the VIX goes out a full 9 points. 48.30. We'll dovetail that and what we heard from James Bullitt earlier with our Michael McKee over to what the president is saying right now. We have presidential headlines, which is always good to get into Margaret Brennan today. The president says the CDC thought an official there had coronavirus. That's a really important headline. I'm unsure on that right now. The president saying an official tested negative and he will still travel to the CDC. The president will travel there as well. He says he has dinner with the gentleman of Brazil coming up. He expects the financial markets to bounce back, which is usually what presidents say, and earlier on chastises the Fed. The president now very active and will look for further headlines. All a good time to bring in this extraordinary news flow, Margaret Brennan. Of course, see Margaret Brennan on Face the Nation across CBS television stations Sunday morning. You can hear it on Bloomberg Radio a bit on in a very good Sunday afternoon. Margaret, I guess we don't know where to begin, but let us begin. Do you have a face mask? Did you get a face mask because you are Margaret Brennan?
No, and as the Surgeon General and others have said, civilians shouldn't, but then I know some doctors who say you should. So I think part of what I think the responsibility of people in jobs like mine and yours is this weekend is to try to get to fact and try to lower the panic level. Johns Hopkins said there are 55,000 people who have recovered from flu-like symptoms, perhaps this coronavirus. I think trying to get a handle on exactly how to prepare and what the government's doing is something we haven't had a lot of clarity on. How will you expect the Surgeon General to join us?
Okay, I was going to ask, the Surgeon General will join you. How will you approach your study of the virus on Face the Nation on Sunday?
Well, see, even just what you just said moments before coming to me is a massive headline. The president said someone at the CDC might have been exposed to the virus, and that's why he was calling off his trip. Those kind of things, the president in releasing publicly, as he just did, don't necessarily convince people that everything's under control. It raises the level of panic again. The messaging has kind of been all over the place on this. Vice President saying yesterday there weren't enough testing kits. We are going to have some samples from our colleagues at 60 Minutes who sat down with Dr. Anthony Fauci from the NIH. We will talk to the Surgeon General ourselves. We will have Senator Chris Murphy of Connecticut also talk to us because he's been briefed as a member of the Senate Health Committee and try to get a handle on what the projections are. I think it's interesting, Tom, even the Secretary of State's in Manhattan right now meeting with financial leaders over the next few days. I think it is underestimated what you all are seeing in the markets is not just an immediate term impact, but a forward planning problem. What is that? And not just economically, but what is the reason that we didn't have enough testing kits? What is the reason that we didn't have enough forward planning? That's something that the administration is going to have to really explain.
So, Margaret, obviously the coronavirus is front and center for many, including the financial markets, but it was also quite a week for the Democratic Party, if nothing else, just narrowing down the field. What's the view now for the Democrats here as it seems to be between Biden and Sanders at this point?
Well, it does. It's not necessarily that Democrats fell in love with Joe Biden, but they fell in line and they showed up on Tuesday in large numbers, particularly African Americans in the South. And also you saw large numbers of older registered Democrats showing up at the polls. It wasn't the groundswell of young sort of revolutionary support Bernie Sanders has described that he would be able to bring into the party and reshape it. Instead, you saw quote unquote establishment Democrats show up on Super Tuesday in many of these states and help Joe Biden deliver a win, not just eke out one, but really decisively show that. So that's interesting to see that we went within a week of a really kind of divided party looking at those debates, people really at each other's throats to all of a sudden saying the party needs to put one person forward and line up behind them. And a lot of the financial donors have been the pressure points to make that happen. But the question is what happens in July when the party actually puts forward their nominee.
Margaret Brennan, thank you so much. We'll keep it short just because we've got to do some data checks here with new lows in the market. Ms. Brennan, of course, Face the Nation. Look for that Sunday morning on CBS. And also, of course, we're thrilled to bring you Face the Nation Sunday afternoon at 2 p.m. across Bloomberg Radio. Face the Nation in New York, Washington, Bloomberg 106.1 Boston, Newburyport. Face the Nation 2 p.m. Sunday afternoon. Can we say that Margaret Brennan drove the market lower?
She might have. We just touched minus 100 on the SPX futures.
And Dow futures right now negative 756 as well, and the VIX now out a full 9 points as well. We'll give you more data checks here for you, but right now with a news update in New York City, here's Michael Barr.
Tom, Paul, thank you very much. The number of coronavirus cases globally exceeds 100,000 after more infections were reported in Europe, and Iran revealed another spike. Secretary of State Mike Pompeo says the U.S. is well prepared to take on the coronavirus. Pompeo tells CNBC he doesn't think China acted quickly enough to share information globally on the virus.
I'm happy about the efforts that they have taken, but no less authority than the Chinese Communist Party said it came from Wuhan. So don't take Mike Pompeo's word for it. We have pretty high confidence that we know where this began, and we have high confidence, too, that there was information that could have been made available more quickly and data that could have been provided and shared among health professionals across the world.
Pompeo says the information that we got at the front end of this thing wasn't perfect and has led us now to a place where much of the challenge we face today has put us behind the curve. Meanwhile, President Trump It signed a measure around $8 billion to fight the virus in the U.S. President Trump will visit tornado-ravaged Tennessee today, just days after a string of tornadoes ripped through the middle part of the state, killing at least 24 people. Senate Democratic leader Chuck Schumer says he should not have used the words he used when he said 2 Supreme Court justices would pay the price for their decisions on an abortion case. At a Fox News town hall, President Trump is calling Schumer's words threatening.
That was that was really, if a Republican did what Schumer did, they'd be in jail right now.
Trump also says he was all set to run against Senator Bernie Sanders before Joe Biden's Super Tuesday wins. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom.
Michael, thanks so much. Futures at negative 95, down futures negative 760.
Yep.
I'm going to call that lows for the day with a 48.58 on the VIX. I'm going to say bluntly, folks, to Global Wall Street and to those of you less Global Wall Street, the screen on the Bloomberg terminal now, Paul Sweeney, it's surreal.
It's surreal.
There's just no other way to put it.
And the treasuries, Tom, plunging to new lows here. The 2-year at 0.44%. That's in 15 basis points. The 10-year 0.70.
The critical distinction here, two-part, Paul Sweeney, very quickly, is unlike previous days, we have yields lower with curve flattening, which clearly prices in a global slowdown, and that correlates. And then the other thing we have to media junk paper, oil junk paper, and the rest is the quality corporate debt market's doing really well with low yields, and the junk market's not doing so well.
That's exactly right. We heard a lot of that from fixed income portfolio managers, flight to quality here, where you can find it, where you can find yield, precious in the fixed income markets.
West Texas Intermediate 44.00 gold up $16, $16.83 the ounce. This is Bloomberg.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President, Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Influential conversations from Bloomberg Television. Here's Paul Allen.
Despite the global spread of the coronavirus, not all investors are pessimistic. Our next guest sees, quote, considerable opportunity in the Chinese stock markets. Bloomberg's Ed Hammond is with that investor.
I'm with James Anderson, who is at Bailey Gifford. They're a huge investor in a lot of companies in China. What are some of the challenges of actually deploying capital there? Because a lot of your bets at the moment are based in China. It's not the same as investing in the US. Clearly, it's not the same as investing in Europe. What are the challenges and how do you navigate them?
Well,
The first thing I'd say is that the people who run these companies, as I think you'd recognise, Ed, are very much the long-term owners, long-term deployers of capital, in many cases the founders of these companies. So there is that similarity with at least the West Coast American model on that front. We broadly find that the innovative companies, those that the government feels is helping them drive the economy of China forward, are allowed to have their role and their dominance. But they do occasionally have their wings clipped. And ironically, regulation in China is probably more effective than it has in Europe or America. I feel quite interested at the moment in the degree to which these Chinese companies, the environment's made so it is still profoundly dynamic.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. A powerful rally in U.S. Treasuries gathering pace amid mounting concern over the economic fallout of the spreading coronavirus. U.S. stock index futures are pointing to another day of losses on Wall Street as stocks tumbled around the world. There was little reaction to data showing U.S. employment surged last month with the biggest gain since May 2018. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures down 103 points. Dow futures down 818. That's down 3.1%. And NASDAQ futures are down 317. The DAX in Germany is down 3.8%. 10-year Treasury up 2 4/32. The yield 0.69%. The yield on the 2-year 0.44%. The 30-year yield 1.26%. NYMEX crude oil is down 3 1/3% on $1.75 at $44.19 a barrel. COMEX gold is up 1.1% or $18.40 at $16.8650 an ounce. The euro 1.1341 against the dollar. British pound 1.3014 and the yen at 105.07. And that's a Bloomberg Business Flash. Tom and Paul.
Karen, thanks so much. What we're going to do now is frame out, before we get to the wonderful Tiffany Wilding of PIMCO here, on our economics, the underlying spirit of the American economy as well. And we do this with movement quickly. The president has been speaking. Of course, he signed a $7.8 billion emergency coronavirus spending bill, and he's had a lot of other headlines through the morning. The credit market move index has surged out the most since at least 2011. That's a sort of a general statement there that we'll go with right now. What you need to know is Paul Sweeney and I right now are going to walk through equities, bonds, currencies, commodities, and the correlations today. Paul, let's start with commodities and go backward. And we do this with dinner. The president, Mr. Bolsonaro of Brazil, Brazilian real to a 466, and other commodity-based currencies, including Aussie dollar, just hammered, and that trend continues. Aussie dollar 0.6635. We rarely quote that. Oil 44.13 made a run to $42 earlier today. Brent crude now well below 50.
Yeah, it's just extraordinary, Tom. GLCO screen, the global commodity screen, is absolutely red across the board.
What do you see there?
With only one exception, and that would be spot gold. So everything else is...
Yeah.
And we've seen this commodity sell-off for a much longer time than we've seen it in equities. Commodities have really been leading the way, along with the bond market, obviously.
Gold, of course, up $19, $16.87. The ounce on gold, I want to remind that Jeffrey Curry of Goldman Sachs firmly reaffirmed $1,800 an ounce to us. I believe that was yesterday out of London. Let's move on right now to the bond market, where Paul is just absolutely historic. The 2-year yield driving down 16 basis points, 0.4332. I've lost perspective. The 10-year yield 0.6963. And let us go, Paul, to the 30-year bond. And we'll talk to Tiffany about this in a moment. The inflation-adjusted yield on the 30-year, and I'm going to use a sophisticated financial phrase, is surreal.
Is surreal. 1.26 on the 30-year, down at another 28 basis points today, Tom. So investors are just rushing for the perceived safety of the U.S. Treasury.
Finally, in the SPX, the futures 107, negative 107. Dow futures negative 863. Substantially weaker dollar. And that gets us to Tiffany Wilding as well. Tiffany, you have to brief portfolio managers of PIMCO. There's some shell-shocked. Others, I'm sure, are finding this opportunistic. What is your message to fixed income managers at PIMCO this morning?
Well, so I think you kind of have to put the whole, coronavirus situation in perspective, and that is to be humble about it, because I know, historically, instances like this, ultimately, the virus subsides at some point, and when that happens, you have economic activity that rebounds or returns to normal, but there's a lot of uncertainty around the path to get there. The depth of the type of disruption and how long that disruption lasts is very uncertain, and it's certainly possible, that this could, push the U.S. and other developed market economies into recession before we get that ultimate rebound.
Okay, well, PIMCO had a brilliant call on this. I'm not going to give you all the credit that PIMCO deserves, but you were certainly part of a team that was exceptionally cautious on GDP into 18 months ago and into 12 months ago. You're where you thought you'd be, right?
Yeah, I mean, so, we were more cautious on the potential impact of, the trade war, and we called it a window of weakness late last year, because we thought that could, disrupt manufacturing in the U.S. We ultimately got the trade deal, which we thought was a little bit better. So coming into this coronavirus, actually, the initial conditions in the U.S. economy were actually, looking somewhat better, as were they in the rest of the world. Actually, global manufacturing growth looked like it was stabilizing and maybe even rebounding, led by China. Now, of course, all of that, comes into question now that we have, this coronavirus outbreak. So,
Tiffany, the Fed, is trying its best, I guess, is a good way to kind of phrase it, with that intermeeting rate cut earlier this week. What do you think the Fed's going to do going forward, and is there much it can do?
Well, so if you look at one way to think about this is just to look at historical precedent. And if you look at the emergency rate cuts or intermeeting rate cuts that we've seen, since the, early 90s, we've had 7 instances of them. Each of them, the meeting directly after that intermeeting rate cut, the Fed also cut. So I think by that historical precedent, we should absolutely expect a cut at the meeting in March. One thing that I thought was interesting was that before the blackout period, which actually starts tomorrow, we had several speakers overnight. They didn't really push back against the current market pricing, which is pricing in a probability that they could even cut 50 again. And certainly that would be consistent with historical precedent as well.
What is the efficacy to our listeners of a 100 basis point rate cut over 3 cups of PIMCO coffee? What's it mean?
Yeah, well, I think certainly, and the Federal Reserve understands this, monetary policy is not going to stop the spread of the virus. It's not going to be particularly effective against supply chain disruptions that we expect. But what monetary policy can do, and Powell talked about this, is monetary policy can try to create conditions that instead of exacerbating an economic shock, they try to buffer it. So what tends to happen when you have a growth shock is that can lead to market panic. It can lead to tighter financial conditions, banks pulling back on credit, and that ultimately exacerbates the economic shock. So I think the Fed wants to try to set conditions to where it doesn't do that.
It's going to be. We'll get to next week. Tiffany Wilding, thank you so much. The PIMCO this morning, and this with the VIX, not up to 10 points, 9.31 points. I'm going to round that down to 9 points so we feel better. 48.93. What's so strange, Paul, is I say a VIX of 48.93. I am going to round that up. A VIX of 49, and the screen doesn't look VIX 49-ish.
This is a number we had. Nick Colas from Data Trek Research on yesterday, one of the smartest folks we have, and he says when the VIX gets up to 50, that's when you really got to pay attention if you're thinking about buying the dip. That was the number that really jumped out at him, and here we are.
I think the history. I think the history of that statement is apt. And there's these benchmarks along the way. Of course, we don't do buy, hold, and sell. We'll just give you the data. Futures at negative 100. I'll say this with trepidation. We got to get the market open. This is Bloomberg.
Why is delivering the best client experience a top priority at BNY Mellon's Pershing? Michelle Feinstein, Director of Client Engagement, explains.
Today's investors want a financial relationship that's on demand, customized, and leverages the latest digital technology. At BNY Mellon's Pershing, helping advisory firms and broker-dealers create great experiences for their clients is our priority. Through our integrated wealth experience, we give you a high-touch service, flexible technology choices, and expert insights, so you can deliver a highly personalized experience to your clients at every step, from onboarding to wealth planning, to performance analysis and more. And because we're part of BNY Mellon, you'll benefit from more than 230 years of strength and stability. At Pershing, we're personally invested in your success.
Visit Pershing.com to learn more about Pershing's integrated wealth experience. Pershing LLC and Pershing Advisor Solutions LLC are both members of FINRA and SIPC.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 60.
Now is the chance to give probably the biggest gift of your life. If you're 55 or over, visit freewillsmonth.net. A group of charities have all paid for a limited number of wills for people like us. It costs nothing, and a qualified solicitor will write your will. Choose to leave a valuable gift that lets charities continue to care for the sick and vulnerable, fund groundbreaking research, and provide a wide range of vital public services. freewillsmonth.net.
For up to 50% off a choice of floors and beds. For an extra 20% off selected ranges. For something for everyone. Carpet Right. For life.
At the Bank of Santander, they've created Stan, a smart bot that can predict the future of remortgaging.
All right, Stan, will my mortgage rate go up?
1955 was the last time Newcastle won the cup.
No, try not to mumble.
Playing, let's get ready to rumble.
Meanwhile, at Santander, they can't predict your future, but they'll help secure it with great mortgage rates fixed for up to 10 years. See what's possible at Santander.
Early repayment charges apply. Lending subject to status and criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
Matt Letizia, what did you make of that performance today?
Well, it really was a game of two halves, to be honest, Jeff. Leicester came out in the first half really...
Letiz?
What's up, Jeff?
Run for it!
What the...
Move over, football. Cheltenham coming through. And Sky Bet are on the charge. With money back as actual cash, up to £10 if you lose on the first race of the festival. Sky Bet. That's betting better. Applies to first bet on first race at Cheltenham on losing singles and win part of each way singles only. Money back as cash, free bet stakes excluded, eligibility restrictions, T's and C's apply. 18 plus, begambleaware.org.
This ad is made from 100% recycled commercials. Just like Smart Water's
all new
bottles are made from
100% recycled
plastic.
What's that number again?
100%. Every Smart Water bottle is made using recycled plastic, and because it's still
100%
recyclable, the plastic will be used again
and again.
Smart Water, now in a 100% recycled plastic bottle. Label and cap 100% recyclable, but not made from recycled plastic. Yet. We're working on it.
Independent advisors. Learn more at SCIC.com. The S&P 500 is lower at the open. It's down 2.9%, down 88 points to 2935. The Dow Jones Industrial Average down 2.9%, down 770 points at 25,361. And the Nasdaq is down 3%, down 260 points at 8479. 10-year Treasury up 2 and 4/32. The yield 0.69%. The yield on the 2-year 0.45. 0.44%. NYMEX crude oil down 3.8% at $1.74 at $44.15 a barrel. COMEX gold up 0.9% or $15.10 at $16.83.10 an ounce. The euro 1.1339 against the dollar. The yen 105.23. Tom and Paul.
Karen, thanks so much. Paul Sweeney, before we begin, our esteemed guest of the value persuasion, Dow 10,000, it was always a benchmark. This week we've had Dow 10,000. If you go from the highs of near Valentine's Day to the bottom, and then you go back up on the Biden rally, and then you roll over to where we are right now, it's over 9,000 points.
That's right.
That's been the swing.
That's what
the new Dow 10,000 is a swing down, then up, and as we roll over here, down negative 811 right now. Why don't you bring in the gentle lady from Wisconsin?
Ann Maletti, just one of my oldest friends in the business, known her for a long time. And what I like about Ann is she's been an active manager through many, many cycles in the market, including the financial crisis. She's seen this before is another way to frame it. So, Ann, we've seen volatility before, but we haven't seen this type of volatility, have we?
Paul, thank you both for having me on. We haven't. This is something new, and when you see something new, you get reactions like this, especially when it's this black swan event, something that came out of nowhere. And we all know fear is a stronger emotion than hope, and it creates panic moments like this.
So, Ann, what isn't, you have to put money to work, yet you have to obviously be mindful of preserving capital. How do you approach markets like this? Do you stick with the names you know you like and you just add to them, or do you really have to play defensive?
It's a really good question. And in my new role, leading all of the active equity teams, what I've seen as very tenured portfolio managers and analysts looking at opportunities and looking at both the short term and the long term. And so you look at short term changes in the market, you make some hard choices on your portfolios about what you want to be invested in today, but you also look forward and you say, what do I want to be in when this turns around, when we have more information about the virus, when we have people calm down and the markets calm down, where do I want to be on the other side? And so looking through the panic, looking through the emotion, and really focused on the future.
What do you say about the financials then? I mean, one of your great charms is the distance to New York, where you're not infected by too big to fail or super regionals and all that. What is Wells Fargo and Strong and all the heritage you have in? What do you say about the financials that have cratered?
There are some opportunities that will probably present themselves, but I think it is right to be selective and pretty cautious here, just given the fact that we are in uncharted territory as it relates to rates. And we know that has a pretty big impact on the banks themselves. Now, financials is much broader than just the banks, so you have, a lot of financials that may be attractive and that could still do well. So I want to make sure that we think about financials in a broader sense. But if this is a quicker snapback than the market is predicting today, this low rate environment will be good for some of the banks as it relates to loan growth and other things. So it may not be as negative as the market is interpreting today. So again, it's watching very, very carefully.
I don't mean, Paul, to get all Templeton on you, but we'll go there right now. Sir John would say shares are on sale. How about a stock from the Midwest where Ann's coming from, down 21%, and with it, you're paid a dividend of 3.5%, growing at almost 8% per year. I mean, that's how value people think, isn't it?
What stock would that be?
They've got bulldozers. It's yellow. It's Caterpillar. And granted, global slowdown, Caterpillar dies. I get it, but we know they don't die.
Exactly. So, and I mean, it's interesting. I mean, one of the things that people are trying to figure out now, I'm sure the asset managers at Wells Fargo Asset Management, is kind of really what the economic impact could be globally here. What are the good folks at Wells Asset Management thinking about the global GDP fallout from this virus?
Well, it is certain that it's having a pretty quick impact on the economy globally. And even as we kind of enter North America, we're starting to see some impact on travel and other things. Certainly corporate travel has been impacted. We're going to see real quickly here what happens to leisure travel as we come up on spring break. But behaviors are changing. It will have an impact. I think if we think about it within the markets, certainly a lot of our teams are thinking close to the fact that we will probably have flat earnings growth. That's probably a base case scenario. And then you think about, well, what kind of multiple do you put on that? And again, if you think about a base case on that, if you just look at a 5-year average of the S&P, that seems somewhat reasonable as where you could end up. That might be even too bearish, again, depending on the timing. And if you think about individual companies, you'll see some companies that can very much outperform that, and other companies that just will do worse.
Emma Luddy with us, Wells Fargo. We're going to continue here. Let me do a data check, Paul, just to keep us apprised of the markets, and we do that with the Dow negative 725,417. We're open for trading. Standard & Poor's 500 well under 3,000, 2942, down 82 Standard & Poor's points. And the VIX, remarkable. It was up 9. It's up 7.8 points right now. You quote the VIX in points, 47.41, which is just the oddest, grim statistic. The yield space, a 2-year yield, 0.44%. The 10-year yield, where the 2-year yield was 3 cups of coffee ago, 0.71%. And a 30-year bond, I was less great, Paul, and we were quoting 2% is an interesting point. And the 30-year bond, that would be 73 basis points below 2%, 1.27%. Ann Maletti from Wisconsin insists I quote yen 105.21.
So, Ann, what's the sense that you guys had at Wells Fargo when you saw the emergency rate cut this week? How do you think the Fed is doing here, and are they going to have really any impact on the market?
You start to get into trouble when the markets disconnect from expectations of the Fed, right? So the markets start to expect something. If the Fed doesn't deliver, we start to get in trouble. And so everybody does understand that a quick rate cut's not going to spur the economy right away. But there is this expectation. I think the only thing that I would say is better communication around why and the timing would be very, very helpful and maybe cause a little less panic.
Okay, just quick questions here, Ann, because we have to go just because of news flow. Yeah. Growth or value right now?
Tom, I would say that there are places within value that will do well, but also areas of growth as you come out of this.
Give me a Harry Truman answer. On the one hand, on the other hand.
Well, you know what? Because there's been such a big washout of the market, it's too hard to pick one side.
Okay, what about international versus domestic? Do you go full faith and credit, U.S. blue chip, whatever? Or do you buy internationally or in this big blow up?
Yeah, I think I feel a little bit stronger about domestic right now.
Okay, one final question. Next year, Green Bay or Detroit?
Green Bay.
Okay, there we go. That's a perfect segue. Ann Maletti, I knew the answer. Ann Maletti, thank you so much. I hope you share a football game with David Harrow there as well. She is with Wells Fargo, just terrific in value invested. Did I set you up good there, Michael Barr? That was
set up and strike three. That was it right there.
Maybe Detroit can trade their whole team and get a 5th round draft pick or something like that, or whatever they do in the summer months.
We need something.
Well, it's spring training. Hope springs eternal for the Tigers, right? So let's just stay with that for the moment.
No, I don't need. No, it's not going to spring eternal for the Tigers as well. We have the Dow negative 17 and the VIX 47.36. With our news in New York City is Michael Barr.
Thank you very much, Tom. Thank you very much, Paul. The number of coronavirus cases globally exceeded 100,000 after more infections were reported in Europe. Meanwhile, Iran says the new coronavirus has killed 124 people amid 4,747 confirmed cases in the Islamic Republic. Secretary of State Mike Pompeo tells CNBC the U.S. is well prepared to take on the coronavirus.
We also don't want to overreact. We don't want to get this wrong in ways that are disconnected from the science and the reality. So we work every day to make sure all across the United States government, indeed our CDC and healthcare professionals working all across the world to share information, both to reduce risk here and then begin the important work on the vaccine as well.
Pompeo says imperfect data from China on the coronavirus has hindered the U.S. response to the outbreak. President Donald Trump will visit disaster areas in Tennessee today, just days after storms whipped across the state and left 24 people dead and many more injured. Trump approved a disaster declaration yesterday. Senator Elizabeth Warren, after dropping out of the presidential race, appeared on MSNBC to talk about her exit from the race and her potential endorsements. She also says there was toxic behavior found in select groups of Senator Bernie Sanders supporters and called out Sanders for ignoring the problem.
This fundamental question about what goes on online and where those lines are and how much each of us, and I want to say this for all of the candidates back when there were lots of us, we are responsible for the people who claim to be our supporters.
Sanders is still waiting for word if there will be an endorsement from Warren or will she endorse Biden. Global news 24 hours a day on air and on a quick take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom, Paul?
Michael, thanks so much. Again, negative 752 on the Dow. I need to give you a level, 25,366. That's 4,000 points below where we were record high. As I said, the swing today, go down. Go up on the Biden rally, come back down, and you're looking at not 10,000, but about a 9,000 point gyration in this extraordinary volatility. And you see that with 8 big figures, Paul. Yep. 8.27 on the VIX, 47.89. What do you see on the screen, Paul?
Yeah, I just see, I'm looking at the Treasury yields, Tom, continue to plunge lower. The 2-year down 16 basis points.
Wow, look at it now.
0.433% on the 2-year. The 10-year is up 2 and 7/32, pushing the 10-year yield down to 0.6853%. Just extraordinary. That's the bottom of the day.
That's a new low for the day. Yep. 0.4273. The 2-year yield breaks down to a new low, to be clear. And the 30-year bond, I don't have the energy here to get up the yield, the intraday yield chart, but 1.25% of the 30-year bond. It confirms in yen, making a new stretch for a stronger yen. Not there yet, 105.18 on yen, but definitely stronger for the day. And let me look at gold here quickly. We say good morning to young Gartman of Virginia, who's been dead on gold, $16.81 the ounce, up $13 on gold. That's in U.S. dollars. I don't have it on my chart, Dennis. Gold and yen. I don't think I could.
WTI crude off 4%.
See that? You see how the power that Michael Barr has? We insult him with Green Bay. So what's he do? He demands Bob Seger. Stay with us. This is Bloomberg.
This is a Bloomberg Pursuits look at luxury. Amid the gloom of coronavirus impact around the world, from the $1.7 trillion tourism industry being at risk to the James Bond sequel No Time to Die being moved from April to November, there's one bit of good news. Private jet bookings are up. As the wealthy aim to duck risk on commercial flights, private jet charter firms have seen a 25% spike in business. It's not cheap, but it can be relatively competitive with luxury commercial travel. The cost of flying round trip from New York to London on a 12-seat Gulfstream 4 is about $140,000. That compares with $10,000 for a first-class ticket flying commercial, although those have lie-flat beds. Even after COVID-19 has passed, the business bump may remain stateside. The U.S. has surged ahead as the world's top hotspot for the fabulously rich. According to the Knight Frank's 2020 Wealth Report, the number of $30 million-plus fortunes in the U.S. rose 6% last year. I'm Andrew O'Day, Bloomberg Radio.
Hey, y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Global news 24 hours a day, on air and at TikTok on Twitter. Powered by more than 2,700 journalists and analysts in over 120 countries. This is Bloomberg Radio. Now, a global news update.
President Trump has signed an $8.3 billion government measure to tackle coronavirus. Public health agencies will access that money to stem the tide of COVID-19. Jim Roop is monitoring more in Washington.
Dr. Anthony Fauci with the White House Coronavirus Task Force tells NBC News that the promised 1 million test kits are coming over the next few weeks. Dr. Fauci says, with the exception of the Seattle area, no need for people to panic nor extreme social distancing measures.
We're not there yet as a nation.
He does say there is cause for concern and people should be ready for disruption.
Average hourly earnings rise 0.3%, and the Labor Department reports the strongest jobs gains the nation has seen in over 18 months.
273,000 net new jobs in February. January revised higher. December revised higher. And the unemployment rate back down at 3.5%. That is a 50-year low.
There's Christine Romans. I'm John Trout.
That saying, success breeds success, it's true.
Are we seeing any improvement?
Carol Masser and Jason Kelly.
How would you describe your outlook?
Weekday afternoons at 2 Eastern on Bloomberg Radio. Bloomberg Business Week, now live on YouTube. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. A powerful rally in U.S. Treasuries gathered pace amid mounting concern over the economic fallout of the spreading coronavirus. U.S. stocks are moving lower. The S&P 500 down 3% or 89 points at 2933. The Dow Jones Industrial Average down 2.9% or 747 points at 25,372. And the Nasdaq's down 2.8% or 245 points at 8492. 10-year Treasury up 2 8/32, yield 0.68%. The yield on the 2-year 0.41%. NYMEX crude oil is down 4.4% or $2.04 at 43.86 a barrel. COMEX gold up 0.9% or $15 at 16.83 an ounce. The euro 1.1339 against the dollar. The yen at 105.18. Tom and Paul.
Thanks so much, Karen. Lawrence Kudlow coming up with John Farrow. That's an important thing because he does a set of interviews here through the morning, 4, 5, 6, 7 interviews, and I think John will give him a respectful grilling over the different themes. I would suggest Mr. Kudlow has driven the markets lower. Dow Jones reporting, quote, Trump economic advisor Kudlow rejects payroll tax cut notion. And Paul Sweeney, that's kind of that rescue theme that's out there. I wonder if somebody's going to ask him about the tariffs and any relief there.
Yeah, and this is, I mean, he's actually, admitting, I'm looking at the headlines crossing the Bloomberg terminal, and Larry Kudlow, admitting that this will have an economic impact. And that's kind of the first time, or one of the first times we've heard that from this administration. So they have to acknowledge what they're seeing out there in the market.
Every nuance matters, and I'd really focus on John Farrow's good interview, and we'll have that here in a bit. Negative 800 on Dow, negative 786 right now. Who's keeping score? The VIX out 9 big figures, 48.88. And I just want to give one domestic yield, the 2-year yield, 0.4017. At the end of every mathematical equation, there's a pretty little symbol called epsilon. And that's sort of the risk that's out there. That's sort of the fancy Tom Keene translation of epsilon. In the adult world of the Bloomberg terminal, the epsilon is the land of Damien Sassower because epsilon in crisis usually involves emerging markets. Give it to us straight. Mexican peso out near 20, Brazilian real on a borderline log jump condition. How's that epsilon measure this morning?
Yeah, no, all this stuff with the Treasuries curve, going to zero is basically weighing on EM. You're right. 462 and rising on real. I mean, look, what's interesting is you had Economic Minister Geddes just this morning saying, if we go to 5, I've not done my job, I've messed it up. And you know what? 10% of all call option protection has a strike of 5 or greater. So we're heading there.
What's the leakage process or reaction function given crisis? Is it observed in currency? Is it observed in domestic yield debt? Is it observed in dollar-denominated debt? Where do you see that?
Well, I think you really have to look at the U.S. Treasury swaption grid here, because there's some very interesting points that it's making, and one of which is this, right? Just like the VIX, you've seen this inversion in volatility. And you're seeing the same thing in U.S. Treasuries. But what's really interesting is if you look a little bit further out to the intermediate tenors, you've got vols plummeting 3 to 7 year. What that tells me is we're going to be lower for longer, right? We're going to be in this low yielding environment for much longer than the markets think. And additionally, if you just look at the 100 strike in Eurodollar futures, the skew is basically is rising, which means we're not going negative. The Fed is not going to let us go negative.
Let's go to a headline, Paul, that Mr. Sassower can comment on.
Well, here's something, Tom. I'm just crossing the Bloomberg terminal. The OPEC talks said to be on the verge of collapse. You look at the screen here. We've got WTI crude off 6.5%, $3,
well, and
$2.90 a barrel.
It follows on a Germany 10-year bond yield falling to record low. Damien, all this is correlated. It's a Cram and Christ question, but I'm going to go to you. What's the correlations right now that we see with the Dow negative 826?
Very, very high correlations between credit spreads and crude oil. Very high across IG, high yield, and emerging markets. And so if you just take a look at that, if we're going further into contango, credit spreads do not like contango in oil. So yeah, no, this is really bad.
We're going to define that right now. And again, folks, stay with us commercial free. This is Bloomberg Radio Worldwide with another day of market sport. There's any number of stories, but what you need to know is a true collapse in yields over the last 15 minutes. Our important interview, John Farrow with Lawrence Kudlow, coming up in a minute. Damien Sassower, what is contango?
Contango is an upward sloping crude oil curve, right? So effectively, you're basically what you're saying is, upward sloping is backwardation. This one's the other way. So basically, when you go into contango, it means that your front month is basically collapsing. It's way worse than your back month, and it's bad. It basically means that there's supply and demand disruption forecasted by the market for oil production, and credit spreads do not respond well to the fact that they can't fuel whatever it is they're looking to manufacture.
So it's interesting, you told me this this function a few days ago, the World Currency Ranker, WCRS, on the Bloomberg terminal.
Is that why the smoke's coming out of your terminal right now?
Tom, is an ugly look. The only thing that's up appreciably is the Argentine peso. I'm seeing, the Brazilian real off 13%. I mean, your world is a disaster.
Yeah, no, I mean, there's no question about it. I mean, what's interesting, though, is how stable the yuan has been throughout all of this. I mean, we were hyper-focused on China.
Come on, it's not a floating currency. It's being managed, right?
Yes, it is. How much does it cost for them to manage that currency?
Let's rip up the script here. Damien, how much management's going on right now? I mean, every country has their own method of management. Brazil does it a certain way. South Korea does it a certain way. How much management of the management is going on right now?
Well, in Brazil, I don't think we were seeing much management, right? That's why they were letting the bottom fall out of it. Yeah, exactly. But in China, you're absolutely right. They're definitely managing through this as best they can. But is it going to manifest itself in reserves? Is their import coverage ratios going to slide off the back of this? Probably not.
2-year yield U.S. 0.38 handle right now. Dow negative 879 in trades. Damien Sassower with us, and we're thrilled with his EM and sophisticated perspective right now. Let me get sophisticated. Some years ago, peso traded on how well Secretary Clinton did in debates. And if she did well, peso, whatever the move was Secretary Clinton. That's all over now. Why is peso so weaker now, blowing out to 20.28?
Because people have been using the peso as an equity hedge against the SPX.
Translate that.
The correlation between the Mexican peso and the S&P 500 is higher than you're going to find in any EM currency land. So, people who are looking for some sort of a Polish hedge against, a decline in the S&P may have been selling pesos. And so I think that's what we're seeing
So you own the S&P,
right,
and you sell pesos
as a hedge against
that the peso will strengthen.
No, sell pesos, because you basically, when the dollar peso rate goes down, that's actually I'm all confused now. Sorry. Yes, no, that's a rally in the peso, but we're seeing it rise. So when it goes up,
you can become
I'm all over the map here, Tom. I mean, markets are going everywhere. But yes, no, the idea is that the peso is very strongly correlated to the S&P.
Germany's 10-year bond, Tom, yield falls to the record low on the 10-year, minus 7.4%. Damien, in terms of emerging markets, compare this period to the financial crisis. How different, the same, feels different?
It's starting to feel the same to me, Paul. I mean, if you look at, the Schatz 2-year asset swap spread, which is a recession, recession protection, again, just like the yen, just like gold, just like what we're talking about, it's blown out, and look at FRA OAS this morning. I mean, it's...
What?
The forward rate agreement, 3-month forward rate agreement relative to overnight index swaps, which is an indication of short-term credit risk in the market.
I thought flat OAS was like in the tulip section when you walk into whole paycheck. The what?
Oh, my goodness. I'm going to hear about this one.
The what?
FRA, forward rate agreements, right, versus OAS. It's a indication of short-term credit stress in the markets. It's
Tom,
a funding ratio.
Bloomberg screens look nothing like our Bloomberg screens.
Folks, you just got to understand, I feel like such a mortal when Lord Sassower walks in. It's extraordinary. Negative 800 on the Dow, 25,326, the VIX 4950. What are you going to write about this weekend? And tell me, try to speak in English.
Okay. I'm going to be looking at sovereign credit default swap spreads and how they're correlated to China, because I do think what's getting missed in all this is the fact that China does have a very big impact on EM, even though we're hyper-focused on the U.S. market right now. And I think if China goes, because of all the payment pressures that are obviously building in all these parts of the market, I think China's going to feel it, and I think it's going to be a direct impact on EM.
The rap on CDS is you don't have volume, so you get accurate price bid ask. In a crisis like this, do you all of a sudden get volume where you can trust what you're reading on the Bloomberg screen?
Wow, you are punching a hole in my research over the weekend before it's even begun, Tom. Yeah, no, you're absolutely
Just take
right.
Notes and,
CDS has definitely dislocated from reality in recent months. That has a lot to do with what you're seeing in the market. But, in times like these, you reach for whatever protection is on offer at any of the banks. And credit default swap volumes, I imagine, are going to pick up off the back of that.
See how I'm dazzling him? Yep. I mean, he just thinks I'm watching the Red Sox middle relief, and he doesn't understand I'm actually reading this garbage. Paul.
So, Damien, one of the things that's different from the financial crisis is the banks. I'm not sure. Do you feel like the banks and the financial institutions are in the market providing liquidity like they were maybe in before the financial crisis?
Now we're talking. We're talking the great Zoltan Posar of Credit Suisse. And so he put out a piece early in the week, and I can't stress enough how important it is that everyone reads this, because we saw no payment stress whatsoever across any market due to the coronavirus. Why, you might ask? Well, he has a suggestion. The suggestion is that the first thing to go are trade finance, commodity finance, shipping finance. What that does, it actually has a positive impact on bank balance sheets. They actually look stronger. Once that kind of moves through the system very quickly, you start to see, guys tapping credit lines, corporates going to their bank saying, I need dollars, and that's when the payment pressures start, and that might be what we're seeing here.
Cut to the chase. Again, negative 800 on the Dow, folks, 25,318. Damien Sassower, what's the x-axis on that Credit Suisse research? I mean, he's
a sensationalist. There's no question about it, but his observations are very sound, and he gets asked. No, I think right now is what you're seeing. And I think the Fed cut was, I think it was more about lubricating the markets as opposed to stimulating them. And I don't think a lot of people got that. I think people thought, no, this is stimulus, growth is coming off, inflation is nowhere to be seen. That's why we're cutting rates. They weren't cutting rates because of that. They're cutting rates because they're hearing that corporates need dollars.
To this good, I don't mean to interrupt, but you didn't finish. You got to finish the tail.
X-axis.
Credit Suisse came out. What's the timeline to where they have the relief in their shipping stuff before they get to the stuff we all learned in finance? Weeks?
Well, now that we've cut, what happens is you have to understand, right? If you look at bank-to-bank, interbank lending, what it does is it makes it much more, much easier, much cheaper for places like Taiwan, Japan, the intermediate producers of these goods that, Apple needs to basically, or that China needs to assemble Apple iPhones, they can now acquire dollars less expensively. And so you're seeing that in places like Taiwan, and I imagine you're seeing it in other places like South Korea and China and Japan as well. And that's a good thing, right? Because that's going to alleviate some of these payment pressures in the near term. So, that's one of the things you have to be producers of these goods that
China getting back to work?
China needs to assemble Apple iPhones. The data I look at says yes, but the data can be misleading for sure. I'm looking more at South Korea. I think I could trust the data out of South Korea a whole hell of a lot more than China. And yes, things look to be getting a little bit better in the near term, but, with oil prices here and U.S. Treasuries falling out of bed, I think there's a lot more going on here than meets the eye.
Let's do that. Let's address the oil price. Lisa Bramlett is going to step into the conversation here as well. She's really been focused on this. It's what, 16% of the garbage market? Is that right?
It's been coming down because they've been defaulting, but yes. I mean, it's a significant part. It was once, I believe, more than 16% even.
And Damien, that's a tangible part of the market, right?
Yeah, no, it is. I mean, certainly that we're talking U.S. credit, but now if you want to talk about EM credit and you include all of those those oil exporters, that number spikes pretty considerably.
I have to say, I'm sorry, I'm breaking in here, but I will just say this. I think that the story of the day, to me, I'm looking at American airline bonds that mature in 2022. You laugh, but I want to give you this statistic, okay? American Airlines implied borrowing costs surged from less than 3% last month to more than 11% today. Give you a sense of what the potential risk is here. If they have to roll over that debt, what is the potential risk of them being unable to do so or then having to finance themselves at such high costs they cannot maintain their business?
Absolutely. American, Jaguar Land Rover. I mean, you can go on and on. United. You can talk about a million different companies that are basically going to be going through the same exact thing. I mean, the refinancing of some of these bonds is going to be huge, and it's all spread related.
Damon Sassower, thanks so much for joining us. Damon Sassower does all that emerging market stuff for Bloomberg Intelligence. Coming up in just moments, we have Larry Kudlow, National Economic Advisor, President Trump, coming up talking about the jobs numbers, but also obviously on the coronavirus. He'll be sitting down and chatting with Jonathan Farrow. We will bring that to you live in just moments. Quick data check: S&P down 86 points, down 680, NASDAQ down 239 points. So continued weight to the market. Coming up, we will have, I'm sure Jonathan Farrow will be talking to Larry Kudlow about that, the financial markets and their responses to the corona crisis. This is Bloomberg. We're going to go right to Jonathan Farrow and Larry Kudlow.
Economic Council Director. Larry, I know you must be exhausted given your duty so far this morning, so let's get straight into it. The good news is the labour market going into this growth scare looks pretty decent.
Yes, right. By the way, I feel great, and thanks for having me back on the show, Jonathan. Labor market looks excellent, very strong, and incidentally, most sectors in the economy look strong. We're through the first 2 months of the first quarter, right? So we got January and February, and some of the China influence is already affecting us, but the numbers are probably better than anybody thought. You may be 2.5% to 3% in the first quarter. I know, as a realist, economic growth is likely to slow in the second quarter and maybe the third. I don't want to get too far ahead of it because some of these economy is very strong. 273,000 jobs, and as you know, Jonathan, with revisions, 358,000 jobs. That's a blowout, and wage rates still rising, and the blue collar boom we've talked about still there from these data. Middle income, lower wage people are outperforming their managers. Unemployment rate 3.5% across the board, every single demographic group. So that's awfully good. Housing is improving. Building is improving. You have a lot of construction jobs in this report and a pickup in manufacturing. So yes, the economic base is strong. The fundamentals of the economy is strong. We are going to see some issues coming up from the coronavirus. I get that, but I think for the United States, this is going to be a temporary problem.
Larry, not a time to panic, but a time to be prepared. And I hope it's temporary as well. We've seen the rate cuts from the Federal Reserve, an emergency 50 basis point cut. What's the administration working on to complement that?
Any of our fiscal policies, Secretary Mnuchin and I talking about it, Treasury and NEC and other groups are helping us. We're in the camp, Jonathan, that wants timely and targeted micro measures, not large, sweeping, hundreds and hundreds of billions of dollars that don't affect incentives and don't affect growth in any permanent way. We're worried about people who may have problems with jobs and wages because they have to stay home. We're worried about small businesses, for example, that might need some help to get through this if it turns out. We're worried about certain sectors of the economy, airlines coming to mind, but I don't want to get too deep on that might need some help. We're looking for targeted measures that will do the most good in a short period of time, not large macro kinds of solutions which don't help economic incentives and have no permanent impact on growth. We want to just get through this and help folks as much as we can in a targeted way.
Larry, that's music to my ears, because we've got a bit of a problem here. This can be temporary. It's a one-off shock. It will fade. But what will determine how temporary this is the kind of tools we have ready to deploy to help SMEs, to help some people who are struggling. They've got to stay at home. So walk me through the policies, the actual policies. You're having the discussion. When do we start to get some results?
Stay tuned. Stay with us. We may have more to say about this next week. You know, I think we need to do this, Jonathan, when the actual facts come in. Now, we're getting reports from industries. We had the airline people in the White House earlier this week. President Trump's talking to a lot of major sectors across the economy. We just want to keep gathering as many facts and information as we can before we come up with anything specific. But we are looking at this, and as I say, temporary and targeted to get through this, which will be, God willing, a temporary virus problem. You know, that's our approach. We're not looking for big picture, gigantic packages that will not help growth that we've learned in the past and will be, huge budget busters.
Larry, something you've said concerns me, though, that we're going to wait. We're going to wait to see what the data says. And what I've seen so far is not just the administration, but signs coming from policymakers elsewhere that they're just being held hostage by, say, what happens in the next move in financial markets. And they haven't got the tools ready to deploy when they need to. This should be the planning stage. We should be ready to go. Have we seriously got no policies ready to deploy if things get worse next week, the week after?
My short answer is yes. We can move very rapidly. And we're doing a lot of homework right now on all these points. Jonathan, I don't want to put them out publicly because
I understand, but restore my confidence, because we have a moment now when there is a real lack of confidence, Larry. And you know me, I don't like to lay it on thick. This isn't about making people fearful of things. I just think there's a lack of confidence in global officials, not on the medical side, and that's not for you and I to discuss today, but on the economic side. Talk to me about the policies. Have we got payroll tax cuts ready to go? Do we have a targeted lending program to SMEs ready to go? Do we have a tax forgiveness season ready to deploy if we need to?
We have made decisions on some of that. Again, payroll tax cuts, we can debate the pros and cons. I lean against them. We've tried them in the past. Temporary tax cut that cost a lot of money, $650 billion. They don't last. There's no incentive effect because they're temporary. Again, Jonathan, I think the basic view here amongst my colleagues is temporary and targeted. So if cash injections are needed to help folks who are at home because of the virus one way or another and lose a paycheck or two, we want to help them. If small businesses are in dire condition in certain parts of the country, we can inject some cash. That could be true in farming, that could be true in manufacturing, that could be true in transportation and a lot of other places. So to pull that trigger will not take much time at all, and probably we'd like to do it internally, if we can by executive order. We just got the $8 billion package from Congress. That's good, helping us on the medical side of this. Very important. Thank them for it.
Yeah.
We may need to come back. If we need to go back to Congress, we will. We won't hesitate. But we are in the planning stage. And by the way, Secretary Mnuchin reminds me, the G7 just had a very important conference call, and all these big countries are making their own plans as things develop in those countries. So I don't want to be premature, but yes, this can all be done in a very timely way. We just need, information gathering is very important, Jonathan, and I will say this to you. With respect to the jobs report today, which was a blowout number, I mean, employment is blown out under President Trump way beyond what anybody thought possible, but that good income numbers, good consumer spending, good housing numbers, let's not assume the worst. You've got a menu of options here. All right, some options are negative, some options are either less negative or rather positive. And I want to, wait and see how that plays out. The same is true with the actual medical reports on the contagion of the virus.
But Larry,
so let's just wait and see. Let's not extrapolate.
I totally agree.
Worst case.
And I don't want to teach you how to be a policymaker. You're far more experienced than me. But you know what this is about. You hope for the best. You prepare for the worst. You've told me you're ready to move quickly. Let's talk about thresholds. I've got a bond market with yields at all-time lows. I've got crude down 7-8% on my screen right now. My Bloomberg terminal is lighting up. It's lighting up. It's the threshold is what will determine you to move and deploy those tools that you say are ready to go in a timely fashion. Does the market dictate that? Does the data dictate that? What dictates that?
Well, look, both will dictate that, but we can't. Look, you've got myself, Secretary Mnuchin, others, President Trump for that matter. We all have a lot of market experience. We all have a lot of private sector business experience. So, yes, of course we watch financial markets. On the other hand, you have to watch the actual data on the ground. Economic data, the health data, the virus-related data. So we have to do that. We can't just make a move because the bond does thus, in 2 hours on Thursday or Friday. We can't do that. We're watching it. We're trying to do our homework and watch everything. I just want to say, though, Jonathan, again, I'm not the medical expert. I am part of the task force. I'm in constant touch on a daily basis with our really experienced CDC people and others who have done such a fabulous job. I mean, I got to give them a lot of credit. They're all over it. Most Americans are not at risk. That is their view. Most Americans are not at risk. The biggest risk cohort is, in fact, the seniors, the elderly folks, and they need to be extra cautious.
Yeah.
The younger you are, the less risk you're facing. And most Americans, over 80%, recover rather easily should they get the virus. I want to put that out because my point is, if you're healthy, and you exercise common sense about washing your hands and Kleenexes for sneezing and coughing and things of that nature, and you avoid the obvious places where there are travel advisors, but most Americans are healthy and should go about their business. That's what I'm saying.
Larry,
that's what the data is suggesting.
I respect you a lot, and you know that, but neither of us are medical professionals, and I have a duty of care to my audience that neither of us are medical professionals, and I want to focus on the economic data, not the data from the virus. On the economic data, it's clear already that delivery times in the PMIs are stretching out. They're getting longer. We've got a supply chain issue. An easy way of addressing the supply chain issue would be to drop some of the tariffs. Why are we not talking about that? You said it's about the data. There's an easy policy response. There's no follow-through. Why not?
Just quickly, the supply chain data shows a slowdown in deliveries. Yes, not huge, I might add, Jonathan. Not yet. Not huge. It may be out there, but so far, really quite manageable. With respect to tariff policy, I've not heard the president mention that. It doesn't seem to be on the table right now. We would undoubtedly like to focus much more on our domestic issues, whether they're economic issues or they're health-related issues. So the tariff question is not being addressed at the present time.
But Larry, final question. Can you see why this is a problem for global markets right now? That the president is signing a bill and the only policy initiative he's talking about is cutting rates again and getting the Fed to stimulate. And you and I know you know this, there's a policy ready to go to offset a lot of fear out there at the moment, whether it is justified or not, and there is a reluctance to deploy it. And I just don't understand why.
Well, Jonathan, we have to be thoughtful and careful and analytic. We don't want to willy-nilly throw $300, $400 billion with $1,000 check to every American.
But Larry, that's not what I'm saying. I'm not saying a helicopter drop. I'm talking about removing tariffs.
And it doesn't work in the past.
I'm talking about removing tariffs. I'm not talking about helicopter drops. You know I'm not.
Regarding, as I say, removing tariffs, not everyone agrees with your analysis. It's something that thus far is not surfacing yet. We like our China policy, and we like the fact that China has cut its own tariffs. And by the way, when this virus period ends, as it will, you're going to see a major export boom from the United States to China that is going to grow the economy by at least another percentage point in the years ahead, and I wouldn't be surprised if we saw that towards the end of the year. Regarding other measures that I mentioned, measures that would be timely and targeted towards individuals or small businesses, or perhaps some industrial sectors, that's on the table. We are in the planning, we are in the discussion and planning phase. Jonathan, again, we have to exercise some caution and analysis. We are in touch with everybody in the economy, every single sector. They're coming to visit us on a daily basis, and the president is deeply involved. And my hat's off to the vice president who's leading this healthcare task force. So, Jonathan, don't be impatient. You got to exercise some judgment before you jump in, but we're on it. Trust me, we're on it. I'm telling you this morning, probably more than has been put out publicly. We are on it, and we are looking at these various targeted approaches.
Larry, you know I respect you, and I appreciate your transparency today, and thank you for giving us your time. Larry Kudlow there, the White House National Economic Council Director. So get you a check on those markets.
Right now, we were just listening to Jonathan Ferro interviewing National Economic Council Director Larry Kudlow on the potential response by the federal government, possible stimulus when it comes to the federal government to ameliorate some of the issues that we're seeing right now expressed in markets, extreme stress. If you look at certain credit gauges, if you look at certainly the sell-off that is deepening, but really the place where you're seeing stress or perhaps the sort of rush of cash is in the Treasury market, where you're seeing the biggest one-day drop in 30-year yields since 2009 at least, and you're seeing just in general everyone reprice rates closer and closer to zero. Yelena Shulyetyeva of Bloomberg Economics here with us, and Yelena, I just want to get your response to what Larry Kudlow said, and he was talking about how strong the economy was heading into this and that it will be resilient and can recover quickly. Do you agree?
Well, we agree with him that it will be temporary in a sense that with the current policy response, the slowdown will soon transition into a contraction, and therefore the slowdown part will indeed prove temporary. But back to your question, is the economy strong enough going into that? I would say that the latest payrolls report did show that the economy had some strength, and this is the key premise for us to think that we will not dip into a recession. So at least our base case scenario. But the numbers today did not, they were not as strong as it was looking at the first glance. So first of all, the number was inflated by the construction sector hiring, which was mainly due to weather, which was very warm during this winter. So if you see this reversing in the spring, this will exacerbate the slowdown that will cause the services sector to slow down as well. So I would say, yes, the economy is relatively strong, but the response should be quick and not targeted. It should be a massive response if we want to avoid the recession.
Lisa, we're also very fortunate today to have in our Bloomberg Interactive Broker Studio Mike Collins joining us. Mike is a senior investment officer and senior portfolio manager for PGIM Fixed Income. Mike, thanks so much for joining us here. You guys have, I'm going to call it a gajillion and $1 under management. You see the markets on a global scale. What are you seeing today and over the past couple of weeks?
Yeah, well, you're finally starting to see the capitulation phase, right? Okay. Up until just a couple days ago, as we're talking to our high-yield traders and portfolio managers in all of our different credit sectors, and we said, listen, what can you buy cheap? And they said, there's no real forced selling yet. There aren't that many opportunities, as much as you would think, given the widening we've seen in credit spreads. But I think that's changing a little bit on the margin here. And we're actually in the mode of looking for opportunities to add risk here, right? To Elena's point, I mean, I think there are a few big considerations. One, the momentum we had in the economy was really solid. And every data point we get kind of reveals the strength going into this. Two, there's already been a lot of monetary stimulus, and there will be more. Interest rates for corporates are much lower. Leveraged loan issuers and borrowers see their funding costs automatically go down, right? Because their yields are based off LIBOR. So they go down instantaneously, right, to reduce their interest expense. 3, there will be a huge coordinated global policy response above and beyond what we're seeing from central banks. And 4, these things tend to be seasonal. This isn't like 2008 where you never saw the end game, where people were worried that maybe this is a 1930s Great Depression and it lasts 10 years. Here, there is some seasonal aspects to this type of virus. So I would bet in 6 months you're going to look back and say, wow, I wish I bought more stuff in the February and March of 2020.
Mike, before I dive into exactly how you buy this dip and what gives you confidence that you're not catching a falling knife, I want to take a bigger picture question about what Larry Kudlow was talking about and the fiscal response. I mean, what is the potential risk here that there is not a sufficient fiscal response and that something that's temporary becomes something much more permanent as companies run out of money and are unable to finance themselves at costs that are feasible? I mean, I'm looking at American Airlines, borrowing costs going from less than 3% to more than 11% in a matter of days. How do you sort of stave off that risk?
Yeah, so there are two big risks, right? One is that you actually have a big earnings contraction here, right? So the EBITDA or cash flow part of the leverage statistic, debt to EBITDA, really plummets and your leverage goes up and you do get downgrades and you do get funding stresses there. 2 is a liquidity risk in the markets, that you do get more capitulation and people panic and get out of the markets in big size. And we really have not seen that yet, right? We've seen some big redemptions out of ETFs and high yield and loans. Investment grade credit have generally, until the last day or so, seen big inflows as their yields are at new lows and their prices are up significantly. If there's a lot of forced selling, which we really have not seen yet, then people have to scramble and raise money. And even the highest quality bonds, even the best securities, go down in price because you need to sell them to raise money.
So, Yelena, Bloomberg Economics, your base case is not a recession. What are the data points that you're looking at that could push you into recession scenario? What are the key things you guys are looking at?
Sure. So we recently downgraded growth forecast to just 1% in the first half of the year in terms of GDP. We were above 2%, I think, just before it all started. So I think we need to look at how growth is evolving. So if we get to a stall speed for year-over-year growth in the vicinity of 1.5%, that's where this is a tipping point, basically. So if growth slows down below that, that basically passes the point of no return, and we will go into a recession. So that's why, I think policy has to be more proactive. Look at what the Fed did. They were proactive. They cut rates.
So you weren't necessarily impressed by what you just heard from
Absolutely not. I think it does require a massive policy response, not a targeted one. While they're looking at the data and collecting all of the data that he was talking about, the Fed will have to cut to a zero low bound. And how much ammunition will they have left? So the earlier the fiscal response comes, the better it is.
So I want to, Mike, get your sense here, because right now you talked about liquidity pressures, that we haven't really seen it so far, that we actually saw inflows to investment grade credit. The high yield bond outflows have been controlled. Trading in the market has withstood it. Today, however, we are starting to see a little bit of a different tone in markets. What are you looking for, and how close do you think we are to some sort of liquidity event?
Yeah, I think we're still far away from that. I mean, even this morning, we are seeing people looking for offerings, looking for bonds to buy, right? I mean, we've instructed our high yield team to really try to be aggressive here and buy our favorite higher quality high yield bonds at much wider spreads and much lower prices. And believe me, it's been much more difficult than you would think based on what you see on the screens, right? Bid offer spreads have widened, and we still see credit investors recognizing that low interest rates are probably going to be here for a long time, right? Right now, the Fed funds futures market are basically pricing in a zero funds rate for the next year and a half or so. And in that environment, again, if there's a dissipation in the spread of the virus, and if there's any stabilization in growth in 6 months from now, that reach for yield will be dramatic. And you are seeing people looking to buy on these dips still in the credit markets, at least in the higher quality credits, and we're in that camp.
So, Yelena, if it is up to the central banks, we've seen the Fed be preemptive. What are you seeing around the world? Is there coordination there? Do you think there needs to be more if the fiscal maybe is not on the front burner right now?
I'm not a big believer in that, actually. If it gets to a credit crunch and things like that, yes, central banks will need to coordinate some sort of currency swaps and other tools that they engaged during the financial crisis. But in terms of the policy, so we still have some ammunition left in terms of interest rates. So each central bank will do what they need to do for their respective economies, but the fiscal policies, again, in each different economy will have to engage. So I don't really see that much in terms of what can be done in terms of coordination, rather than just agreeing that the response should be a big one.
Mike, I'm struck by the idea that we are looking at bigger companies still having access to credit markets, and we're looking at the prospect of small to medium-sized businesses not having the same sort of financing function, whether banks are hoarding cash, whether their inventories go down, they have to hold more capital in order to preserve their capital buffers. I'm just wondering, from your perspective, there's been all this money raised in the private debt markets. Is this going to be an opportunity, or is this going to be another risk factor as we start to see weakness in some of these portfolios?
Yeah, I mean, we've definitely for a long time now been concerned and raised some concerns about the huge influx of money into private debt strategies. I think these are loans to relatively speculative companies, pretty concentrated portfolios of loans in some cases, and some are on a levered basis. And if you do actually see credit cracks in some of those portfolios, I think it could get a little bit ugly, right? So I think that is one of the parts of the market that's a little susceptible to some weakness here. But again, the policy response, I think, will be targeted to provide liquidity and financing to some of these smaller companies. Even in China, they have these things called coronavirus bonds, where companies that need the capital are financing their businesses and their capital shortfalls at really low interest rates.
But is there a bigger takeaway here, the idea that all of this money was raised for these private credit funds that sort of were supposed to supplant the big banks and their lending function? And this is the time that they should be swooping in, and they should be saying, we have money, we have a record amount of dry powder, let's deploy it in order to make these investments. What does it say if they are not, or if they are incapable of doing so because they're trying to meet margin calls or other sort of liquidity issues, or just frankly defaults in their existing portfolios?
Yeah, I mean, Lisa, in my dream world, right, the Fed will tap the banks on the shoulders and say, hey, guys, this is why we forced you to have so much capital. This is why we forced you to have so much liquidity, and your asset quality is pristine. You should actually be supporting the economy now, right? In all past cycles, the banks were piling onto the weakness by being forced sellers because they had all the loans and they had a lot of leverage in the system. They are not in that position. So our long-running view has been the banks will not make things worse, and maybe they can actually provide support here.
On the flip side, will some of these private credit funds or these big alternative investment funds become systemically risky in a new kind of way?
Yeah, remember, so a lot of these are locked up. These are long-term pools that are locked up. That is really important, right? This is not 08. This is not a global margin call about to happen. Even the bank loan market is owned almost largely now by CLOs. This is long-term money that is locked up, right? They are not for sellers. And I think that's really important. I think the structure of the markets are much different than they were in 08. You don't have the inherent leverage in the system that's going to force a lot of selling and a margin call. So I think that will help lend stability to the system ultimately.
Elena, Larry Kudlow, rightfully so, on Bloomberg Television, talking up the strong jobs numbers, 273,000 jobs. Obviously, that is likely to be the last jobs report they would get pre-corona crisis, if you will. What is your outlook of Bloomberg Economics for kind of how this could trend over the next several months?
So we looked at the numbers just based on the financial shock before even all the quarantine measures kick in. So that implies a reduction to the average pace in jobs to something like 150,000 on a trend basis. But when we start seeing all the services spending slowing down, people not going out, people like canceling conferences and so on, that will probably get us to the point, to the replacement rate of around 100,000 a month. So that would mean that the unemployment rate will stop falling and potentially could rise, causing a growth recession.
Mike, just real quick here to wrap it all up and to tie it together, you said that you were selectively buying on the dip. When do you go in and just say, buy everything? I mean, are we getting close to that point when you talk about capitulation?
Yeah, you do it when you have huge blocks of bonds for sale, names you like, that you own, that are down 5 or 10 points, and you can actually buy them and execute. And we have not seen that at all to this point, right? And that's when you really go in with both feet. And maybe that'll happen. My sense is it probably won't.
Mike Collins, thanks so much for joining us. We really appreciate you making the trip across the river from the Jersey side over here to our Bloomberg Interactive Broker Studio. Mike's a senior investment officer and senior portfolio manager for PGIM Fixed Income, and Yelena Shuletieva, senior U.S. economist for Bloomberg Economics, both joining us here again in our Bloomberg 1130 studio. Right now, let's get a check-in on what's going on in the markets with Greg Jarrett of Bloomberg News. Greg, what do you have?
I'm here for you, Paul. We're sponsored by Witham, a forward-thinking, technology-driven advisory and accounting firm helping clients be in a position of strength in today's modern business landscape. Visit Witham.com to learn more. I'm happy to report that we're well off earlier lows. The S&P is now down 1.9%, down 56. The Dow is down 1.6%, down 422. We had been down over 700. The NASDAQ is down 1.7%, down 148. The 10-year is up 1.3% with a yield of 0.7702%. West Texas Intermediate crude's taking quite a hit off what's happening at OPEC, down 6.6% at 42.85 a barrel. COMEX gold is now down 0.9% at $16.5140 an ounce. The dollar yen is at 105.56. The euro $1.13 even, and the British pound $1.30.26. That's View Up to Date. That's a Bloomberg Business Flash. I'm Greg Jarrett.
Thank you so much, Greg Jarrett. Right now in focus, we're looking at markets. They're clawing back some of their earlier losses, so we're not seeing as steep of a decline, actually a pretty significant pairing of the loss, still solidly in the red. The S&P down 1.8%, NASDAQ down 1.7%. Oil, however, very much in focus with crude prices absolutely tumbling down at one point more than 7% after OPEC Plus did not come to an agreement on production cuts. OPEC, remember, agreed to production cuts alone. They went it alone, hoping that Russia would join up and do the same, but Russia did not. Joining us now, Julian Lee, Bloomberg oil strategist in London. Julian, can you just give us a sense of what we learned today?
I think that we've learned that this is an organization that appears to be in complete disarray. What OPEC said yesterday, sort of late afternoon, was that they were proposing a cut of 1.5 million barrels a day, of which the OPEC members would take 1 million and their non-OPEC partners would take the other 500,000. That cut would last throughout the second quarter, so till the end of June. They then sort of hastily got together in an informal gathering in the evening and issued another press statement later in the day to say that, in fact, they were going to propose that this 1.5 million barrel a day cut be extended to the end of 2020. None of these discussions involved Russia or the other non-OPEC members. The Russian oil minister arrived back in Vienna today for a meeting that was scheduled to start at 10 o'clock. It eventually started at around about 3 p.m. He spent the time before that in bilateral meetings, mostly with Saudi Arabia's oil minister. We hear that in the last 15 minutes or so, the meeting has broken up without an agreement. And this is, I mean, in some senses, this is even worse than it sounds for OPEC and its allies, because their current agreement to cut 2.1 million barrels a day expires at the end of this month. And so without an agreement, at least on paper, those 2.1 million barrels are going to come back onto the market. So not only are we not going to get a deeper cut, but we may well get oil coming back.
So, Julian, it just begs the question, how did we get here? There was a time when OPEC or OPEC Plus was pretty cohesive, able to push things through. What's changed here?
I think that's a very good question, and I think it's very unclear at the moment what has changed. Ministers and their delegates are being very close-mouthed at the moment. They're clearly dealing with a situation that none of them likes being in. I think that perhaps what has changed is that there are very different views about how to deal with a crisis that is created by a collapse in demand. Saudi Arabia wants to make a corresponding cut in supply, to try and balance markets, to try and prop up prices a bit. The sense that we're getting coming from Russia, and it really is only a sense, is that they don't feel that that is perhaps the right response, that what the world needs is a period of lower oil prices, hopefully to stimulate some demand, whether that is final end user demand or whether it is countries like China buying more oil to put into stockpiles. And there may be a real philosophical difference around how you proceed in an environment like this.
There's also a question about whether OPEC has completely lost control in every way, because ultimately this is not a production issue. This is a demand issue. And there is going to be a decline in demand that we've seen escalate as travel gets rearranged and as global industries do start to slow in the wake of the coronavirus. I'm just wondering, from your perspective, how that sort of factors into the calculus here, the idea that even if they cut production a lot, it may not make a material difference in the short run.
Yeah, I think that is a real concern, and I think that's one of the Russian concerns. The view is that yes, there's going to be a very significant hit to oil demand. We can see that happening already, but the view perhaps in Moscow is that, bad as it may be, it is going to be temporary. This is not a structural change in demand. This is a response to a very specific, in this case, virus outbreak. But it is something that will have an end, and demand will return. And I think this perhaps is part of the difference that is emerging.
So, Julian, I've heard some conspiracy theories out there that this might be Russia maybe trying to put additional pressure on the U.S. shale industry, given the precarious financial position of many of the producers there. Does that ring true to you at all?
I don't know. I mean, I think it's always tempting to find conspiracies to build around anybody's position. Another country that may have desires to cause damage to the U.S. shale sector is Iran, but Iran has been wholeheartedly behind output cuts. I mean, it's not going to have to make any because it's producing really only pretty much what it needs for its domestic consumption. But Iran isn't trying to engineer a collapse in oil prices to hurt U.S. shale, and I doubt that that's the Russian motivation.
So right now I'm looking, just to reset here, crude oil absolutely tumbling. Crude traded on the NYMEX down to $42.75 a barrel. That is down by $3.15 just today, giving you a sense. Brent traded in London at $46.82 a barrel. I'm wondering, what is the lower bound here for this demand side crash that we're seeing play out across markets?
Well, I think we've had a number of analysts coming out with all sorts of numbers. I've seen numbers suggesting that prices will quite easily fall below $30 a barrel. I've seen people saying that we're in for a return to the collapses that we've seen in the past of really low double digits. And I think very much is going to depend on how individual producers respond to what appears to be a failure to reach a deal. Does this mean that Saudi Arabia is going to abandon its own output restraint? Are we going to see Saudi Arabia pumping more? That would certainly, I think, push prices down. If we continue to see restraint within OPEC, that may give a little bit of support to prices, but I think that the really big issue at the moment is just how fast and how widespread the collapse in demand is going to be, and that is still an evolving picture as this virus spreads around the world.
Julian Lee, thank you so much for joining us. We really appreciate your thoughts here. Julian Lee is an oil strategist for Bloomberg News, joining us on the phone from London. Again, the news from in the world of global oil: OPEC Plus fails to reach a deal as Russia refuses deeper oil cuts, just sending OPEC into disarray. Really a negative shock here, short term here for the market. We've got WTI crude off 6.8%. That's more than $3 a barrel. Brent, is off again, off 6.6% as well. That's at $46 a barrel. So real weakness in global oil. Right now, let's head down to our 99.1 studios in Washington, D.C. for World and National Headlines with Nathan Hager. Nathan, what do you got?
Nathan, Paul. Good morning. The global coronavirus outbreak has now reached Europe's busiest airport. 2 British Airways baggage handlers at London Heathrow have tested positive. Globally, more than 100,000 people have come down with the illness. The death toll around the world is past 3,400. That includes about 200 infections in the United States and 14 deaths.
Unforeseen problem. What a problem. Came out of nowhere.
President Trump, as he signed a $7.8 billion emergency spending measure to combat the coronavirus outbreak in the U.S. In an interview on CNBC, Secretary of State Mike Pompeo pointed a finger at the Chinese government.
The information that we got at the front end of this thing wasn't perfect and has led us now to a place where much of the challenge we face today is put us behind the curve.
But the White House now says it is on top of the curve, and the hardest hit areas in California and Washington state are getting all the test kits they've asked for. Even as he urges calm, top economic advisor Larry Kudlow tells CNBC Seattle is a place Americans should avoid for now. Joe Biden is riding a Super Tuesday surge, but as Bloomberg's Amy Morris reports, it could put him under a tougher microscope now.
President Trump has vowed to turn Joe Biden's son, Hunter Biden's, service on the board of Burisma Holdings in Ukraine into a campaign issue. Now, 2 GOP committee chairmen in the Senate are pressing ahead with investigations of the Bidens for conflicts of interest. But with the presidential election now just 8 months away, some Republicans are questioning whether Congress should be pursuing this at all. The Biden campaign has dismissed the effort as a nakedly political ploy. In Washington, I'm Amy Morris, Bloomberg Radio.
Global news on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries.
Vatsal Shah is Senior Project Engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology, and as an adjunct professor is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to the city on the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that? So in 10 years, we're actually ready to take on those challenges when we have our first development in the water. NJIT also has been doing a lot of work in self-healing materials, so taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies? Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn at SEIC.com/seize change.
My mother was always very active and independent, and she was familiar with her neighborhood. But one day, she stopped at the stop sign for much longer than usual. She wasn't even really sure where she was at.
It's important for you to talk to someone about it. I felt so much better after my son told me, Mom, we'll figure it out.
When something feels different, it could be Alzheimer's. Now is the time to talk. Visit alz.org/ourstories to learn more. A message from the Alzheimer's Association and the Ad Council.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Elite advisory firms rely on BNY Mellon's Pershing to meet the needs of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon NA. Member FDIC.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Stocks are down in the red for another day, but are well off earlier lows. Treasury yields have plunged to fresh records amid mounting concerns the coronavirus outbreak will derail economic growth, and oil is tanking. We look at the numbers every 15 minutes. The S&P is down 1.6%, down 50. The Dow's down 1.5%, down 395. And the Nasdaq's down 1.6%, down 139. The 10-year is up 1.36%. The yield right now is 0.7654%. West Texas Intermediate's down 6.8% at 42.72 a barrel. COMEX Gold is down 0.9% at 16.52 even per ounce. The dollar yen 105.45. The euro $1.1308, and the British pound $1.3031. A credit derivatives index that measures the perceived risk of corporate credit surged by the most since at least 2011 is concerned is intensifying that the spreading coronavirus will crimp cash flows and dent the economy. That's a Bloomberg Business Flash. I'm Greg Jarrett.
You're listening to Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Boy, the headlines crossing across my Bloomberg terminal this morning, just almost too much to take in. You've got the coronavirus latest. You've got the Democratic race really heating up, and you've got better than expected, actually stellar jobs numbers. Fortunately, our next guest can help us parse through all of these things and more. Chris Luce, Senior Fellow, University of Virginia Miller Center, and also a former Deputy Secretary of Labor under President Obama, on the phone from Charlottesville. Chris, thanks so much for joining us. Let's just start real quickly with the news today. I guess, this is the last piece of economic news we'll get kind of pre-coronavirus in terms of jobs, and it was pretty darn good, wasn't it?
It was surprisingly good, and I think people, though, need to take it with a grain of salt, obviously. This data was collected the week of February 10th, so that's before the first coronavirus death in the United States, before, airlines started cutting back flights and people started canceling conferences. And so this may be, all data is lagging indicators, but this is perhaps, I think, less useful, although it may be an interesting benchmark to see as this coronavirus goes on as to how far we fall from this.
Yeah, well, Chris, and this sort of goes to the point of momentum heading into the downturn. And I want to talk about how important that momentum actually is. How much will that buoy any potential ramifications from the spread of the coronavirus and subsequent business shutdowns going forward?
So I have to say, I was surprised by this number for a couple of reasons. We know that retail sales have been, or a lot of retailers are cutting jobs. We know that Boeing, which is a huge part of the economy, continues to struggle. We know that the manufacturing sector is sort of inching itself out of recession, and there's a lot of uncertainty in terms of the ability of China to make good on their Phase 1 trade deal. So I was expecting a much lower number. So this number is curious to me, but I think the issue going forward is coronavirus more like a hurricane, for instance, which case there's kind of a dip in spending, a dip in economic productivity, and then all of a sudden you kind of come out of that. In fact, you have rebuilding and people spend and you sort of come back out of it quickly. Or is it kind of a constant drag on the economy? And the question is with all of these businesses, starting to issue earning warnings and, conferences and other things like that being cut back, when do employers start laying off workers? And if that happens, then this can kind of go south pretty fast.
So, Chris, in terms of governmental response, we've had the Fed aggressively move here with that emergency cut. And, the market's discounting even more rate cuts coming up maybe as soon as the next meeting. We had Larry Kudlow on Bloomberg Television earlier, and Jonathan Farrow from Bloomberg Television was really pressing him on maybe some fiscal type of stimulus. And Mr. Kudlow didn't seem to want to go there.
Yeah.
What do you think needs to happen in terms of governmental response?
Well, this is the problem. Fed rates are actually pretty low, historically low right now. We've had, $1.5 trillion of stimulus through a tax cut. And so right now we're facing budget deficits of $1 trillion a year. So a lot of the normal levers you would have as a government policymaker in a time of an economic downturn aren't really available to you at this moment. And the truth be told, if the issue is in terms of supply chains in China or people not traveling as much, it's hard to say what stimulus package could get those things up and running again.
Well, let's talk about the concept of 0% overnight interest rates, because that seems to be what's increasingly being priced into markets. 30-year yields tumbling the most since 2009. Meanwhile, we've got another 50 basis point rate cut being priced in to the Fed's March 18th meeting. And I'm just wondering, do you think that this will hurt or help or sort of on the margins do anything in response to this?
Well, when we had the cut the other day, Powell was very clear that, this is not going to make vaccines come out faster. It's not going to unstick supply chains. And I think, if anything, the market viewed that as kind of an act of panic, which I think then sent the market down even more. Look, I think any kind of stimulus like that is helpful, but I'm not sure it ultimately addresses the problem here, which is there's an incredible amount of uncertainty. The answers will come from NIH and CDC and the World Health Organization. They won't necessarily come from economic policymakers. And I think what you really need more than anything is you need a kind of a calm, stable leadership at the top of government that's kind of steering this ship through, increasingly turbulent waters.
Chris, let's switch gears a little bit to politics. It was a very, very busy and important week for the Democrats, down to two candidates now. Give us your lay of the land of how you think it might shape up between Bernie Sanders and Elizabeth Warren.
Bernie Sanders and Elizabeth Warren?
Yes, Elizabeth Warren, sorry.
Look, I think she did an interesting interview last night, Senator Warren, where she didn't...
I'm sorry, Senator Biden and Senator Sanders.
That's what I thought, actually, Vice President Biden. I don't think this race is over anytime soon. I think we've got a couple important states coming down the road. We've got Michigan next Tuesday, and then some really kind of key battleground states of Arizona, Florida, I think on March 10th. And so, and obviously the way that Democrats allocate delegates is on a kind of a threshold basis. So you can continue to rack up delegates all through this process. And we obviously have another big presidential debate coming up in about 9 days. And so there's a lot of dynamics. And I think what's been sort of head spinning for all of us that have been in politics a long time is how quickly the narrative has changed over the last couple of weeks. And so I would not be surprised if it changes again, multiple times before we next talk. But I think this race will go, well into March and potentially into April if Senator Sanders is able to mount some kind of comeback.
Chris, let's bring both what's going on in markets as well as politics together. And it really is, you are the perfect person to do so, given the fact that you've spent decades in public service, including 7 years in the Obama administration. What should the response be by the Democratic candidates to the escalating coronavirus to show that they can, take charge and pose some sort of alternative?
Well, I think this really plays right into the vice president's hands. I mean, he's trying to project normalcy, stability, competence, and again, whatever you think about his policies, whatever you think about his, debating style, this is a person who's been in Washington a long time. One of his first key assignments under President Obama was managing the $800 billion stimulus back in 2009, and his charge was to get the money out the door as fast as possible, to look for shovel-ready projects. And so he knows how to manage a crisis. He knows how to pull the different levers of government programs to get an economy back up and running. So I think this is perfect for him in this moment to stand as a contrast to, I think, what even some of the president's supporter would say has been a less than clear message coming out of the White House these days.
Chris Liu, thank you so much for being with us. We really appreciate it. Chris Liu, former Deputy Secretary of Labor and Senior Fellow at the University of Virginia Miller Center. Really important to have his perspective, given his experience, his decades in public service, understanding sort of the nexus of the economy and the private sector, as well as governmental response at this day, where we see markets unclear of how to price the coronavirus risk other than simply buy bonds. Right now, we are seeing bond yields tumbling. 30-year yield move just astronomical. I'm looking right now at a 3-year yield off earlier lows, but still 1.3289% as people look for any haven. The other haven we're looking at is gold. Gold surging to the highest levels since 2013. No, off that actually. Question here about margin calls. Exactly. This is Bloomberg.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
On average, in London, a scooter or motorbike is stolen every hour. Make sure it's not yours. Lock your bike, chain the rear wheel, and cover to make it harder to steal. Lock, chain, cover. The Met Police.
Delayed at the dentist, and now you're late for school pickup. You need a free now. Need to take the dog to the vet before lunch. Should have gotten a free now. Trying to get 4 kids and their baggage to the airport. Free now. Sometimes you can't get from A to B fast enough. Download the Free Now app today for quick pickups and reliable drivers, no matter the situation. Less hassle, more hustle with Free Now.
Vision Express understands we're inspired by what we see. Right now, with every pair of glasses, you'll get varifocal lenses half price, plus our 60-day total satisfaction guarantee. Book your eye test online today. Vision Express. Vision taken seriously. Terms and conditions apply. See in store for details.
Welcome to Cathay Island. We hope you've enjoyed flying Cathay Airways. Oh, and Cathay, congratulations on the Euro Millions win.
Tonight's Euro Millions jackpot is a massive £26 million. That's dream come true money. Euro Millions from the National Lottery. Your numbers make amazing happen. Estimated jackpot. Rules and procedures apply. Players must be 16 or over.
At Asda, with our great range of beers and cider, it looks like you're hosting. Get 2 packs for just £18 or just £10 each. Like 12 bottles of Corona or 10 cans of Copperberg Cherry. Cracking brands, refreshing prices. Don't compromise. Asda. Save money. Live better. Selected stores subject to availability. Offer ends 18th of March. 330 millilitres each. Drink aware.
Take the next left, take a right, and you've arrived at your Vauxhall retailer, where you'll find the all-new Vauxhall Corsa. Test drive now and you can take advantage of a £500 deposit contribution with 4.9% APR representative. Book your test drive of the all-new Corsa now. Vauxhall. New rules Britannia. £500 allowance provided as deposit contribution on qualifying new Vauxhalls. Conditional sale and personal contract purchase only. Subject to status, T's and C's, 18 plus Vauxhall Finance. Registered by 2nd of April 2020. Search Vauxhall Test Drive.
Down the right side of the lane, stops at the elbow jumper. Up and good!
TuneIn is your destination for college basketball. And it's free. This week we have a must-hear game. North Carolina at Duke.
2 for the win! No! Tapped up by more! And in at the buzzer! More banks it in!
This Saturday, tip-off is at 6 p.m. Eastern. With college basketball and TuneIn, hear every call from games around the country live. Search college sports to listen free today.
From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Is there any bank right now in the U.S. that you think is a buy?
Do you think Chairman Powell has lost the market?
Jeff Bezos is no dope. What's the big ka-ching?
The big question, I think, for investors is free cash flow.
Breaking market news and insight from Bloomberg experts.
The U.S. tariffs actually hurt both China and the U.S.
Large strategics are looking to either buy or invest in innovation.
Soybeans and corn have been basically at or below the cost of production for about 4 or 5 years.
What we see more bonds, more yield.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Coming up, we're going to chat with Mike McGlone, commodity strategist for Bloomberg Intelligence, get his thoughts on some of the presumably safe haven assets of gold and maybe even Bitcoin. Plus, we're going to take a look at municipal bonds. How are they performing amid the bond yield sell-off? Right now, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg.
Paul, stocks have trimmed earlier losses, but are still well down on the day as investors look at the possibility of fiscal stimulus against mounting concerns about the economic fallout from the coronavirus. The S&P pared its decline by more than 1% right after White House advisor Larry Kudlow was on Bloomberg to say the administration is looking at timely and targeted micro measures to battle the impact from the virus and may actually go back to Congress for more stimulus.
If cash injections are needed to help folks who are at home because of the virus one way or another and lose a paycheck or two, we want to help them. If small businesses are in dire condition in certain parts of the country, we can inject some cash.
We check the markets every 15 minutes throughout the trading day here on Bloomberg Radio. The S&P is down 1.8%, down 53. The Dow's down 1.5%, down 390. And the Nasdaq's down 1.8%, down 156. The 10-year is up 1.47% with a yield of 0.7544%. With the West Texas Intermediate crude has taken a hit, down 8% now at 42.23 a barrel. COMEX gold is down 0.3% at 1661.70 an ounce. The dollar yen 105.36. The euro dollar 13.11, and the British pound $1.30.34. We just got word a short time ago that Deutsche Lufthansa has slashed capacity by up to 50% in the most aggressive move yet by a major European airline to cope with the severe fall-off in travel triggered by coronavirus. That's a Bloomberg Business Flash. Bloomberg Markets is underway with Lisa and Paul.
Thank you so much, Greg Jarrett. Bloomberg Markets is brought to you by Withum, a forward-thinking, technology-driven advisory and accounting firm helping clients be in a position of strength in today's modern business landscape. Visit Withum.com to learn more. Let's take a look at small and mid-cap shares just to give you a sense of how much stocks had been selling off in the United States. They were down well beyond the 3% mark. Now they've been clawing back that, but actually a little bit better in the Russell. Dave Wilson, Bloomberg Stocks editor.
Absolutely. Smaller companies with a bit more of a recovery than larger ones at the moment. The Russell 2000 up 1.1%, and the S&P 500 is up 1.9%. Put that in perspective, though, Russell's still lower for the week, while the S&P 500 is actually higher. So the smaller companies not doing so well on a weekly basis. As for today, the Russell's steepest drop, at least one of them, belongs to the maker of Smith & Wesson guns. It's American Outdoor Brands. The ticker is AOBC, and it's down more than 26%. Fiscal third quarter results were well below analysts' average estimates in a Bloomberg survey. Calix, ticker CLXT, has fallen 23.5%. The developer of food technology reported a wider fourth quarter loss and lower revenue than analysts expected. And DXP Enterprises, ticker DXPE, has declined about 16.5%. The industrial distributor's fourth quarter profit and sales were far below estimates. Now, the biggest gain in Russell belongs to Enzo Biochem, ticker ENZ. The drug developer has risen more than 45%. Enzo's lab unit will begin accepting specimens for coronavirus testing next week. And then there's Tegna, ticker TGNA. It's up 16%. Reuters reported the television station owner received an $8.5 billion takeover offer from Gray Television. Gray's ticker, by the way, GTN, and that stock is down 2%.
Bloomberg Stocks editor Dave Wilson, we appreciate it. I got my year-to-date gold chart up. We're here, it's off about 0.5% today. Gold is about $1,662 an ounce, but that's up about $140 an ounce just this year alone. To help us put that in perspective and where gold might be going in this crazy financial world, we welcome Mike McGlone, commodity strategist for Bloomberg Intelligence. He joins us here in our Bloomberg Interactive Broker studio. So, Mike, a good year-to-date performance. Is this just my trusted and true flight to quality trade?
I think that obviously is the big part of it. But you look at yields today, the low for the 10-year yield is 66 basis points. It's just, I have to say that because I have to think about it, because it's not, 6%, which right. I remember trading in the old days. So that is the key thing for gold. Okay. And it's seen a little bit of a pullback at the moment, but today gold did make a new 7-year high. And one thing that made a new 7-year high is tips. So real yields, and
tip is
the Treasury inflation protected security.
Okay, that's a government bond.
Exactly. Okay. There you go, government. So it's just the plunge in yields. I see Lisa smirking over there, so I know there's going to be a good question coming out of that. But it's the key thing there. So the one thing about gold is it's made this new 7-year high. So we see it's where speculators are a bit long, but taking little profits. But overall, to me, the foundation is quite solid. I.e., look at we have the Fed's reducing rates. We have plunging bond yields, increasing stock marketability, and the key thing to remember about gold is still well below all-time highs.
Right now, looking at gold, it's actually a little bit down on the day, which I'm struggling to understand given the flight to safety. Can we just chalk this up to margin calls?
Yeah, I think so. It's pretty much long. I mean, the speculators are all on this trade, and they should be because it's been moving fast, and of course they're taking a few profits. But last time we had a decent dip, it was down to 1,600, and that turned out to be a good buying opportunity. So I published today, buying the dips mantra really should focus on gold.
Going forward, what level are you looking at as sort of perhaps it topping out? Right now I'm looking at $1,662 and let's move it around a couple and change.
1,700 is the key resistance I've been watching, and I think it's a matter of time it gets to all-time new highs. And that's not profound because it's done it in the euro, the Canadian pound, the loonie, the British pound, you name it. It's just a matter of time. It needs something to really shift and reverse, and I don't see that happening in the near term.
All right, since Tom Keene is nowhere to be found, I think I can go here. Bitcoin, what's your latest thought on that? I'm looking at that chart year to date. Not quite as good as the gold chart. How are you viewing that right now?
Up about 25% on the year. That's it's not so bad. The Bloomberg Galaxy Crypto Index, which is the bar of the market's up 50%. So Bitcoin's lagging a little bit, but Bitcoin to me is stuck between 8,000 and 10,000, just like gold is stuck between 1,600 and 1,700, but they're consolidating bull markets. And one thing to think about Bitcoin is, why should it do anything different than what it's been doing for the last 10 years? And that's appreciating. The difference now is adoption. You look at futures volume and open interest picking up, institutional demand picking up. I need to see something go negative against it.
Hold on a second.
Yeah.
I mean, honestly, markets are, absolutely reaching records on a number of different kinds of metrics as we look at today. A reassessment of risk, a repricing of risk in the wake of the coronavirus. Interesting that you mentioned Bitcoin, Paul. I mean, on one hand, it seems like it's peripheral. On the other, it goes to this real search for yield and the search for alternatives in the era of quantitative easing. What happens to that if this repricing is the beginning of something that's longer lasting?
That's the key thing that's happening. Gold is, if you look at gold since the first 5 years now, gold is now outperforming the S&P 500. That's since the Fed first started tightening. And to me, Bitcoin is part of that bucket now. Yields are going to zero or dropping rapidly. You need to find alternatives. It looks like people are getting into the stock market. This 10, 11-year rally is a bit dicey and wobbly for a while. So things like Bitcoin and gold to me are in the same bucket of, they're quasi-currency stores of value that are becoming increasingly adopted. There you go.
Do you remember when Mike said that the first time in here, that Bitcoin was a store of value similar to gold? I thought it was absolutely the craziest thing. And this was a year ago. But I'm hearing more and more people talk about it. But Mike was the first that I remember.
Most recent example is Lebanon. Problems with the currency there. A lot of people in Lebanon, just like happened in Greece maybe 5 years ago, when they really cut people's accounts, people are going to Bitcoin.
Mike McLone, thank you so much, as always, for joining us today. Mike McLone, commodity strategist for Bloomberg Intelligence, joining us here in our Interactive Brokers studios. Just want to get a read of markets right now because we are seeing some pretty volatile action. The loss is deepening once again. NASDAQ down 2.2%, similar to the S&P. And meanwhile, you're looking at what's going on in bond yields, and it's just lower. The Fed now expected to cut at least 50 basis points at their meeting in a couple weeks. Right now, let's head down to our 99.1 studios in Washington, D.C. Nathan Hager with World's National Headlines. Nathan.
Lisa, the latest headline on the coronavirus is that the University of Washington in Seattle is going to start holding classes virtually for the rest of the winter term, effective on Monday. That's according to a report from public radio in the Pacific Northwest, citing a letter from the president of the University of Washington. The Seattle area has been hardest hit by the coronavirus. Most of the 14 deaths in the U.S. are in King County, Washington. Democratic Congresswoman Suzanne Delbini says her constituents are concerned.
They deserve answers, and that's why it's so important that we have federal, state, and local officials all working together to address this issue.
President Trump did sign a $7.8 billion emergency spending package aimed at combating the coronavirus. He had planned to do that signing at the Centers for Disease Control headquarters in Atlanta, but says that had to be canceled because a worker there tested positive. Turned out to be a false positive, so the White House now says the president will be at the CDC later this afternoon. Right now, he's in Nashville surveying damage from this week's deadly tornadoes. Meantime, Hong Kong is urging its residents to delay non-essential travel with the coronavirus outbreak there. Iran says it could use unspecified force to halt travel between major cities in that country. And the first two coronavirus cases have been confirmed now at Europe's busiest airport. Two baggage handlers from British Airways at London Heathrow have tested positive. In Afghanistan, gunmen opened fire today at a ceremony attended by prominent political leaders in the capital, Kabul. At least 32 people were killed. The Taliban deny any involvement. Global news, 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries.
A pack needs someone to follow.
It's got to be important for somebody to have a breakout moment.
Don't look now, but they're behind you.
Imports declined 2.8%.
Bloomberg Daybreak.
Sources tell us that agreement is expected to include commitments on U.S. intellectual property.
With Karen Moscow and Nathan Hager.
Could we see that play into the results and the forward guidance?
Weekday mornings at 5 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
1 in 3 adults has prediabetes. 1 in 3. That means it could be you, your football buddy, your football buddy, or you, your best man, your worst man, you, your dog walker, your cat jogger. While 1 in 3 adults has prediabetes, with early diagnosis, prediabetes can be reversed. Take the risk test at doihaveprediabetes.org. Brought to you by the Ad Council and its Prediabetes Awareness Partners.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions.
Listen, as a hiring manager, I've got to tell you, the best job candidate isn't always the typical candidate. Sometimes they're a grad of life.
Meet the grads of life. Young adults of unique determination and experience, an ideal fit for your company in an entry-level position, internship, or mentorship. They might not have every qualification you typically look for, but they're exactly who your company needs.
Sometimes the best candidates aren't the ones you're used to.
Go to gradsoflife.org to learn how to find, cultivate, and train this great pool of untapped talent. Brought to you by the Ad Council and gradsoflife.org.
The Bloomberg Business of Sports podcast.
How did the Yankees become this mega valuable team?
Where the money is flowing inside sports around the globe.
From the marketing perspective, where are the dollars spent?
From union heads to team owners, Scott Soshnick and Michael Barr speak to the names that power this multi-billion-dollar industry.
Boston Red Sox CEO Sam Kennedy.
National Hockey League Commissioner Gary Bettman.
Bloomberg Business of Sports.